Hello, everyone. Welcome to the closing playbook for Thursday, October 2nd, 2025. I hope everybody is doing well. We are going to have a special session today. We're going to be doing our normal Shotgun Thursday trades. We're going to be doing some special Shotgun Thursday trades brought to us by Mr. Kane Shea. And then we are also going to be looking at some other cool stuff that we don't normally look at in closing playbook. So trading and education all in one. Let me get Hello, Mr. Graham.
Hey.
You can bring Mr. Kane on now as well. Hey, Kane, how are you?
Great. How are you guys doing?
All right.
I'm just getting things set up for you guys. I'm looking for some great trades right now, so excuse my typing.
No, you do your thing, and you can hang out with Graham's gonna start us off, I think, and we'll get going. And you've got a couple minutes. Let's see what we got.
A couple big updates. Number one, Dave, I just messaged Amanda and said we need a closing playbook song ASAP. So that's top of the priority here for the room. Just so you guys all know, that is the biggest announcement of my career.
Right.
That's what we got coming. You're right, but
never mind like the $100,000 software, Apex software you just put out.
Yeah,
or like,
no. It's all about the theme song. That's what it's all about. I'm feeling a lot better. I think Nate got I was under the weather last week, my wife and I and our kid, and then this week I think Nate got the same sort of bug. But hopefully he's feeling better. In all seriousness, today's Thursday, which if you guys know anything about Thursdays, you know it's what we like to call Shotgun Thursday, which means high risk, high reward trades. We're using 0 DT expiration. We're typically unless we specify otherwise, every single expiration today is going to be October 3rd. That's 1 DTE. That's tomorrow's expiration. So for the sake of trying to get the information to you guys in the chat, we will just list the ticker and the strikes that we're buying and selling. We will not list the expiration date because every expiration is October 3rd, unless otherwise specified. Last thing here, actually, I got two more things. I just got to keep reminding you guys of this so we don't forget. Let me go ahead and share my screen here. All right, I've been working on this all day long. My eyes are getting dry right now. I need to take a break from looking at the screens all day. But I've got something very, very big for you guys Sunday at 7 p.m. It's going to be a full training on historical data, market statistics, how to layer all of the information we kind of get together, how to piece it together to help anticipate what's going to come in the future. There's a famous quote by Mark Twain that the what is it? Oh my word, I'm blanking on it. History doesn't always repeat itself, but it often rhymes. There it is. And we want to find the historic patterns so that we can find the rhythms in the stock market where it's not going to be apples to apples. But a lot of times we can align our approach based on historical data to get a good idea of what's to come next. So we're going to do a full-on training for that Sunday. There's about 1 trillion charts I'm going to walk you through. So make sure you're ready to take some screenshots, take some notes. I'll answer all your questions in the room as well. And I showed you guys this morning. We're going to be like Nicolas Cage in National Treasure, putting our spectacles on, looking through multiple different lenses here to try and get a gauge on the treasure map that we call the stock market. So we're not going in blind. We're going to be flipping through all the different lenses together, having fun. Plus, I'll give you what I consider to be the 5 most important charts in finance right now. I'm going to walk you through them. I'm going to use those charts to give you exact price predictions on the S&P 500, gold, and Bitcoin over the next year. Exact price predictions, and I will do it on individual stocks as well. We're just going to use data and market math, if you will, to try to give us an idea of where we should be landing. Again, this is technically my opinion, but it's not like I woke up one day and said, this sounds right. All I'm doing is just taking all of the charts and data that I'm going to share with you and then using that to form a prediction. Plus, it just keeps getting better. You're going to get the 10 stocks that the data says should see the most success over the month of October. We already had one. We had silver was the first one, and you can kind of see it there. It's blurred out, but that one was silver. You're going to get all 10 of these tickers, the entry dates, exit dates, return expirations for each all of them for free. Yes, you're going to get the whole calendar for free. I wasn't supposed to do that. I normally I'm allowed to share 1 or 2 picks a month for free. I'm just going to give you the whole thing for free. So make sure you're there Sunday night. We got a special surprise for you too. So that was my quick infomercial, if you will, heads up for you guys of
Are you trying to take like a month off and you're just putting it all in one day? Like that was so much.
I think it was more so a mistake on my end. I told Nate and Josiah I could pack it all into one session. And it turns out that I've got about 10 sessions here worth of material, but we're going to do our best to cover it in time to get you out of there in time for Sunday night football Sunday. Try and keep it an hour, maybe an hour and 15. We'll see how long it goes, but it'll be action-packed training, full-on training.
Nice.
So there's my quick spiel. And then my last thing here is Kane messaged me and Florian, who's my top dog analyst. He's an amazing trader and really, really helpful behind the scenes. Kane messaged in about a strategy he's been working on Thursdays with Friday expirations, I believe. And Kane, correct me if I'm wrong. And then so this morning when Nate said he was sick, I kind of like had a light bulb moment. Said, wait a second, Kane has a little something fun. Maybe he could show us for Shotgun Thursdays. So Kane, you want to walk us through whatever?
Absolutely. Mine is a little different though. I think you said you're trading 0DT, so your intent is to close it in 20 minutes, or are we holding to
1 DT? So Friday expiration.
1 DT. Okay. Oh, perfect. Then this is perfect. Yeah. So what I've got here is, when you have like an overnight type of strategy, your predictive rate, you're not going to get 90% win rate, right? You're going to get 60, 55, maybe if you're really good, 65% win rates. But to compensate for that is if you can get a really good reward risk ratio, if you could get a 1-to-1, well, that's perfect, right? So Graham's wrap orders are actually perfect for an overnight scenario. You're only holding it 1 day. You don't have to worry about day trading, pattern day trading. And you capture that 1 day move. And even if you're saying, if you have a 1-to-1 risk reward ratio, or roughly 1-to-1 reward risk ratio, and you're winning 65% of the time, well, that's really lucrative. So Graham very appropriately called it shotgun. So if I can find 10 of these and they're $1 spreads, meaning that I can get in at 50 cents or less, or right around 50 cents, or about $50 investment, I can probably afford 10 of them and see if at least half of them, or hopefully 6 or 7 of them, hit. And then you end up making a couple $100.
Yeah, I love it. That's sweet. All right, cool. Well, I'll go ahead and get started here. And Kane, I don't know, have you been on for a Shotgun Thursday before? It's like the
Wild West
of our trading show.
I have not.
Probably the most fun day.
Okay.
We just basically go through some tickers we like right now, pick some options that match up with the current kind of moves that we're seeing, and roll from there. Now this is the problem: is Nate's not here today. Nate's normally our safer, higher win rate, lower return kind of guy. I'm the shoot for the moon. Let's go get some 200, 300% winners. And I don't care if my win rate's only 50%. I'm happy there. So hopefully we can find some ways to balance us out a little bit today, but we'll see. We'll have some fun. First one I like.
We only have the yin. We don't have the yang.
That's right.
That's right. Yeah.
You can't survive on just yin alone, but yingling. Oh no, never mind.
Probably can't survive on that alone either, but maybe for a couple days. First one I got here is Oklo. We got multiple reasons. One, a gap fill here, right? It just entered the gap area, closing that. We also have Newton ticking up. It's one that squeezes very frequently. It's one that we've loved for a while. And this is going to be a speculative, just like Average Trade, a speculative Shotgun Thursday trade, where I'm basically just going to bet that we will get a similar continuation tomorrow. Now, safely, to fill that gap, you're looking at 130. Actually, look at the high today, 129.64. Pretty darn close to that price point. I would love to see what Kane's Gamma software says about it, but I'm going to go ahead and do just a half move tomorrow. So it moved 10% today. So I'm just going to go for a 5% move tomorrow. Again, shotgun approach. I don't need this to win 70, 80, 90% of the time. If this trade wins 50% of the time, you're doing really, really good. You're making good money. So again, 5% move here would be half of what it saw today. So that'd be about a $5, $6 move from here. We'll call it 550, which puts us at 133 on the strikes. And let me go ahead and pull this together for you with just an out of the money debit spread. High risk, high reward. Right now it's at 30 cents, which, as you guys know, is a little over 200% return on investment. If we're right, chances of you being right are under 50%. But if you can do enough of these, and if you win, 45% of the time, 40% of the time, at over 200% ROI, you crush it. That's kind of my theory here when trading this way. So the first one I'm going to do here, I'm going to buy the 132 call. I'm going to sell the 133 call. Again, we don't normally put debits in here, or the price in here. There we go. Was I talking about twice as fast as I normally do?
No, you're fine.
All right, sorry. I was really getting fired up here. 28 cents. I'm just going to set a debit at 30 cents. I tried to do this one last week. I never got filled, and it was a huge bummer. So I'm just trying to get into it. All right, filled right away at 30 cents, which means, just so you guys know, the most we can sell this for is $1 at expiration, which puts us at a 233% ROI if Oklo gains about 5% tomorrow on a chart visually. You can see visually here, 133 is our sold strike price. We want it above that tomorrow. So see my crosshairs? We want it above this line for our max profit, which is really not that crazy looking at the stock, knowing the ATR and how volatile it has been. So that's my first one on the board for you guys today. Next one I'm going to do. Oh, man, Coinbase. We should have hit this gap fill. Did we do a gap fill on Coinbase? I don't think so. I gave it as my monthly pick. But Coinbase looks really good. I would either do Coinbase or MicroStrategy off the Bitcoin move right now. Let me see. Okay, we'll do MicroStrategy here for my second shotgun. Again, another speculative one, shooting for the moon here. Popping up above the 200-day moving average by a hair. We got Bitcoin moving higher. Has anyone seen Bitcoin today? Look at that. It's gone crazy last few days. If you were on the round table we had, it was kind of exactly what we said typically happens. Of course, no one has a crystal ball, but we should not be surprised to see this happen. Granted, I wanted to see it pull back to that 50-week EMA before going higher. We didn't quite get there. With that said, MicroStrategy likely will, ideally make a leveraged move off of Bitcoin here. So with Bitcoin higher, we could see this one kind of catch up. Obviously, a very different trend line right now than Bitcoin. Very speculative stock. I don't necessarily suggest owning it, although I do think it will do well over the next few months. With that said, I'm just going to go one strike out of the money here and see what we can get. It's 150% return on investment right now. I'm going to type it up for you guys. I'm going to buy the 352.50 call. I'm going to sell the 355 call. So a little over 1% tomorrow. We'll pay 150% return on investment. You could also, you guys are spot on in the chat. You could do Riot. You could do CLSK. You could do Cypher. Any of the minor names. Mirror's doing today. Mirror's moving a little bit, but MicroStrategy is moving nicely. It's basically a big leverage bet on Bitcoin. So if Bitcoin continues to go higher, ideally this would go higher. I don't even think it's reacting enough today compared to the current move on Bitcoin. Coinbase was another good one, but it is pretty good today, and it's filling that gap when we talk about gaps. All right, Kane, do you want to take one from here? Do you want me to keep rolling?
Sure, yeah. No, I've got Meta. So Meta's looking pretty good. If on the daily basis, it looks like it's bouncing off of that EMA 20.
Are you able to pull screen up by chance?
Oh yeah.
I'm a big visual guy.
Share my
Folks, the
screen.
expirations on these are all tomorrow. We've said it a few times and posted it a few times, so try and keep an eye on the chat. The expirations are tomorrow for all these trades, and the reason we have the banner going at the bottom is because people join late and they think sometimes we're taking trades from one of our programs, and we want to let them know that these are trades we're just finding at the moment. We're just scalping these as we go, and they're not fully researched and have track records and all of that kind of stuff.
All right, cool. Thank you, David. So Meta is bouncing off of that. Looks like it could bounce off of that EMA 20. So we're going to bet on that. According to my studies with this exact setup, The next day, we are up at least 64% of the time. So this is a
How do you
pretty
know
good
that?
bet right here. And I have my studies, dude, my methodologies here.
No way.
I'll here. I'll even show it to you right here.
You're gonna have to show me this.
Right here. All right. 64.63% of the time we win. I don't really care about the profit factor because I'm doing a 1-to-1 reward risk ratio debit spread, right? So it doesn't matter what that profit factor is normally because either I win one or I lose one. So meta, we can go over here and we'll just do this at the money or wrap order as Graham calls it, 725, 727.5. Looks like we can get it for maybe $1.20. I'm going to try at $1.15 just because I'm degenerate. And then I will walk it up. I will walk it up. I will try 118. And then all right, so I'll go for 120. It might have moved on me. Nope. Yeah, it's bouncing around a little bit. So maybe 120. There we go. $1.20. So that's a better than 1-to-1 reward risk ratio on Meta. And I'll do one more for you guys before I toss it back to Graham. The next one I've got is Cart. Cart could bounce off the MA90, but not really. You know, it hasn't IPO'd too recently, so we can't really. Oh, this is weekly. There you go. And so it's pulling back to its quarter-to-date VWAP. It's a pretty strong move. I think it could at least hit that EMA 8 tomorrow. And so we'll go with Cart. Cart has had a strong move today, trending upwards. If that continues into tomorrow, then we're in good shape. Cart I have at a 60% win rate. So let's find that order for Cart. Actually, let me type this meta one in for you guys.
I already threw it in the chat.
Oh, you did. Oh, you did. Great. Thank you.
Yeah.
And then folks, that little jingle you hear every couple of minutes, that's me posting them in the announcements. So if you lose the trades in the scrolling chat, just look down below the presentation in the announcements section, and you'll see all the trades in there.
I always forget that's there. That's very helpful.
I do my best.
Awesome. So over here, so if I do a $1 spread, I'm going to pay up a little bit. It's not going to be quite 1-to-1. It's a little too far for me. So I'm willing to take a 50-cent spread over here. So we'll do 39 and a half right at 25. That's a perfectly 1-to-1. I'm not going to mess around with this one. I'm just going to go in. I'm going to go a little higher. I risked $1.20, so I'm going to do 5 of these. I'm going to keep my allocations the same. So 5 of these to match the previous trade at 25 cents. And got filled.
I'm really interested how you're getting these stats because these are the stats I need. I need these stats.
I'll show you.
I just have stats that say stocks like to go up over time, so let's pick some good ones. I don't have the specifics from each stock, so that's super, super cool.
All right. Do you want to go for the next one?
Yeah, I'll roll with one here. I'm trying not to do a crazy speculative. I'm trying to pull my inner Nate here is the issue. At the moment, let me go ahead and pull my.
It's gonna slow you down, man.
I know. So I was gonna do Robinhood. I love that stock. Having a good time with it. It's up 5% again today. It's just nuts. One that I really like right now that we may be able to do a Nate style trade on here is NVIDIA. This one was an Apex entry, Newton entry. Multiple fronts gave us entry signals on NVIDIA. It's been working out nicely. I don't necessarily think this one's going to jump a ton tomorrow, but I want to see what it looks like in the money as long as it doesn't fall like 2% tomorrow. See what that can pay. It's not that great. Typically, would love to see like a 10% ROI at least. Probably more like a 20, 25. So here's a NVIDIA about 1%. If NVIDIA holds up 1% tomorrow, this one's pretty good. Again, I don't know. I need Nate here for he's got more experience with these boring trades. This one pays 20% tomorrow if NVIDIA holds up at least 1%. A little bit, like it can fall a little more than 1%. Let me give you the exact number.
You notice how useless I am, Kane, in helping him try and find good trades.
All right, so we'll call 1%.
You just cheer him on.
It's just I just post stuff in the chat. That's my job.
So this gives you about a 1% buffer on NVIDIA. We're going to go just one strike in the money here. It's currently at 207 debit. Obviously, the lower you can get, the better. But right now, saying I filled at 207, let me just throw it out there, see if it fills. This would pay about 20% overnight, 20% return on investment, as long as NVIDIA doesn't fall more than 1% tomorrow.
These are all debit spreads, guys. We're selling the higher strike and buying the lower strike, and they're all calls, so they're all debits.
So again, it's pretty boring. But here, if I show you visually in a chart, this is where NVIDIA has to finish above tomorrow for me to make 20%, which again, I think that's pretty good pay for the 1% buffer. NVIDIA definitely can move 1% in a day, very normal. But I would not be shocked to see it a little bit just quieter tomorrow. Again, Kane, if I could have your data there. All right, I'm passing back to you. You got one for us?
Yep. All right. I've got Dropbox, a nice uptrend today. And if we look on the daily, you see that we rejected near the MA50 both today and yesterday. So big downward move over the last 3 sessions. And then today bouncing up, and we get a nice continued bounce towards that EMA 20, EMA 8 level. So I like Dropbox quite a bit. And so let's look for our spread. We're going to just go same thing, wrap order on DBX for tomorrow expiration. I'll go 29.5, 30.
I think there's just
Wow, that is. Oh no, that's not it. It's not liquid. It's not liquid enough. Sorry, guys. There's no way. Yeah, we can't do this.
Right. That happens to us all the time.
Yep.
That's actually that's why we love this new software stuff that we've been able to get into, is because for years we'll spend so much time trying to evaluate a good stock, find the right setup. You flip over to the options, excited to pick them, and they're not liquid. You're like, well, I just wasted it. All right, cool. We'll keep rolling here. Let's see. Thanks, guys. Got to run. Telegram. Thanks, Big D said Telegram. That's cool. How about Palantir? Cynthia's asking about Palantir. That is just every time you think that stock's just too high, it just goes higher.
Yeah, I mean, it could tomorrow. Yeah, it could. I don't have specific stats on Palantir, but
I can't speak for Canes, but normally, guys, we don't set targets on these shotgun Thursday trades. We let them ride till tomorrow.
Nate, Nate sometimes will. We have those profit target calculators in the portal for you. The cool thing is, like, you might be looking at your clock right now and be like, wow, I don't have that much time left to set these targets. Well, that's not true. You have all night long to set targets. You can set targets after the market close, no problem. Just set them up. So don't worry about stressing out with targets right now.
So Palantir, yeah, we could target. So tomorrow we could either stay at about, what is that, 188 or 190, okay, in Palantir. So that could be worth, okay, 188. So we can 185, 187.5. That's perfect. If we want to do a Palantir, you could do $1.50. That's not great reward risk, but that's because it's already at 187. It's already at 187.5. So why not? I would be comfortable doing this, because basically it only has to go up another 20 cents tomorrow and you're at max gain. So
we're striking 185 and 187.5.
Yep.
All right, I'll post that in the chat here. I've got one for you guys. I told you I really like Robinhood. Hood's been awesome to me. It's up 5% today. I don't know if it's going to move another 5% tomorrow. I don't know if it's going to fall tomorrow, but I have a feeling it's probably going to move more than 1% tomorrow, more than $1, right? I mean, the stock's up $6 today. Pretty decent chance it moves more than $1 tomorrow. So I'm just going to do a two-way trade here. Not a huge risk to reward. We can actually look to go a little bit wider potentially. Right now it's paying 20%. I think that's pretty good. 20% if Robinhood moves more than about $1 tomorrow. A little bit more on the upside. Let me go ahead and move this downside strike out. Let's go $2 and see what happens here. So this one's a little bit better. This pays 42%. I'm going to do this one. Pays 42% if Robinhood moves at least $2 in either direction tomorrow. It could go up, it could go down, just a little over 1% in either direction. You make 42% on investment. This is going to be an inverse iron condor. So you're going to be selecting 4 options at the same time, sending it all off on one ticket. If this is your first time doing it, maybe pass on this one, just because there's just a little bit more complexity to it. And if you break it down completely to the bare bones, it's the same thing we're doing with debit spreads. You're just doing 2 debit spreads together. But again, I don't want you to freak out if this is your first time participating in one of these. So we're going to be buying the 147 call, selling the 148 call, and at the same time buying the 145 put and selling the 144 put. Again, this is just a bet that Robinhood's going to move a little bit over 1% tomorrow in either direction. I don't care up or down. Either direction works for me. If I'm right, filled right away at 71 cents. So if I'm right, I get 40% return on investment. I think that's pretty good. If we lose, if Robinhood's within 1%, it's going to go to 0. These are spreads, Rob. Now, the interesting thing, if you guys were curious, actually, if you do, if you just did it at the money, the strangle both direction with just the basic calls and puts, it's $3.57. So you would need, get this, you would need Robinhood to move plus or minus $3.50 to make 0%. I think that's crazy. You make the move, you make about twice the move of what I'm going for, and you walk away with a big fat 0.00% return on investment. So that's why I know that trade's a little more complex, but that's why I select it like that. All right, we've got about 3 minutes until the markets close. We've got 1, 2, 3, 4, 5, 6, 7 on the board today. It's a good start.
Nice.
We can go throw more out there if we want, or we can settle with 7. I like to I try to not do anything in the last minute.
Right. Yeah.
Because there's a little delay on the streaming page, so maybe the last 30 seconds. I just don't want to put people in a bad pinch.
Right.
We got about 2 minutes here. Game time.
All right. If we want to do one last one, I could do one ON. I'll just show you the trade rather than explain everything. So let's just go over here. About 58% win rate. Again, wrap order. So just right around at the money. So 42 and a half. Looks like we can get 28 cents. Again, I'm going to do 5 of these just to keep the allocations roughly the same. So it got filled at 28.
Awesome. I'm going to go ahead and do it on my end. We should probably do one. Let me do one to the downside as well, just in case you get a bad flush tomorrow.
Yeah.
That's just at 5% today.
Yeah.
That's wild. Should I take my good friend Rocket to the downside? I don't know. I'll do ANET to the downside. I like this stock, but it's paid well to the downside just because it is so volatile. So I'm just going to trade ANET for, again, $1 move lower, about 1% move lower tomorrow. It's down 3% today. Honestly, you could probably fade it in the other direction and take my money here. Hopefully markets go up tomorrow and I lose this bet. But this is just going to be a small hedge on my portfolio, if you will. Betting that, hey, if the market's soft tomorrow, I bet you ANET's going to fall more than 1%. Totally within reason. I just realized I wasn't sharing screen. So again, ANET, we're buying the 144 put, selling the 143 put. I'm going to put this in the chat. A lot of puts I'm saying here.
Yeah. Hey, after the bell rings, you want to just kind of give people the overall strategy here with the shotgun trades and just kind of with Friday going up and all that.
Yeah, 35 cents entry, so 185% ROI. If ANET falls, again, let me just show you the line in the sand. It's so small with these debit spreads. It's so awesome. Look at my crosshairs here. As if it's below that number, I make 185%. That's nuts. With basic put, probably need it down here. So, wow, AMD's looking good today. A lot of fun stocks today out here. But that now we got 9 on the board for Shotgun Thursday. I think we're probably pretty good there. Unless Kane, doors up wide open for you. With you got the
No,
machine, the stat.
we're down the last 30 seconds. I just leave it.
Yeah. David, what was that you just mentioned that I totally skipped?
I just, a couple of people were asking about, like, do we do stops and targets, whatever, just kind of the overall strategy of, kind of spreading across multiple sectors, and the idea of Friday, generally being a bullish day, and that we're just trying to play the odds or the numbers.
Yeah. Historically, Thursday to Friday is a good day in the stock market. Regardless, we know stocks go up more often than they go down. 53% of the time, the S&P is going higher day over day. There's an edge right there if you're using the wrap order. Wrap orders, again, we haven't really had the time to go into it on this because it's closing playbook, but we're essentially getting a one-to-one risk to reward. You're risking $1 to make $1. 100% return on investment, generally speaking. And if you can do the math and you say, well, if you get $1 back 53% of the time and 47% of the time you lose, well, over time, that's a huge, huge edge. That's like a casino-like edge if you only win 53% of the time. Now, we're hoping to win 60% of the time with the wrap order, maybe higher, maybe 65%. Kane's got the mystery machine over there that I need to see later on that shows him those odds. That's really, really cool. But generally, that's what we're going for, just a greater than 50% win rate here on stocks just going ever so slightly higher, which we know they do more often than not. Now, some of these trades, like my more speculative ones, like the Oklo MicroStrategy plays, those are out of the money. So those are going for 200% gains, 250% gains, 185%, whatever it may be, well over 100%, where we are going to need a slightly bigger move. Now, the whole goal with Shotgun Thursday is to get a nice little basket of trades out there, 5 to 10 positions, knowing that not every single one's going to work out, right? We're going to have some losers tomorrow. Pretty much 100% of the time, we're going to have at least one loser each week on Shotgun Thursday. The goal is that your net basket will average out positive overnight with tomorrow's expiration in place. Now, if you want to use targets, you can. Be my guest. I'm not going to stop you. We've got the calculator in the members portal. We've got the training in the members portal. But ideally, these are geared to work for expiration. That's the way I like to trade them, the max profit. There's a little bit more volatility in your account than just using a target, but overall the profit's bigger as well. So that's my quick 2-minute spiel on it, if that made sense.
Yeah, it did. And Edward, yeah, we're riding them till expiration. We're not going to manually close them unless it looks like they're going to close between the two strikes. So if any of them, if any of them look like they're going to possibly close or expire, I should say, if it looks like any of them are going to expire with the price between the two strikes of the spread, then we want to manually close them so that we don't expire between them. So we generally start looking at it around 3 p.m. And then, if it looks like there's a chance, maybe it's going to wind up between those two strikes, maybe 3:30 or whatever, we put an order in to get out of it. Otherwise, we give it as much time as possible to make us money.
Yep, exactly right. Okay, well, Kane, I know that was a whirlwind of a lot of fun and emotions, but I do know that you've got a strategy that's working pretty good right now for trading multiple times a week. I believe overnight most of the time, right, Kane?
Yeah, they're always overnight. It's super fun. I got a lot of people who are excited every day, every morning to wake up just to see the results of their trade. And it's actually has a lot of really interesting characteristics that make it really good at compounding accounts. So I personally, since May, I've compounded a $1,000 account into over 4,500. I think right now is where it is, over $4,000, and that's since mid-May. And Richard this morning told me he started in, I believe it was in July or maybe August. He started with a $400 account, and he was able to compound that to $1,200 in that time. So
that's awesome.
It's a really cool little strategy that I have, and I'd love to share it with everyone.
Awesome.
Yeah.
You want to share get your screen?
Yeah, I'll start. Yeah, go ahead and share. I'm going to send you into a vortex. Hang on.
Yeah, that's why I was waiting.
Yeah, okay. All right. Yeah. So, and I always love to give a little bit of red meat, explain things, do a little bit of education, so you guys know exactly what I'm looking at and how I think about things. And that way it tends to give you a lot more comfort if you can view for yourself how well a trade is doing, or to know how a strategy is working. So before we go into exact details of the strategy and its performance and all of that, I wanted to share with you guys some insight into trading, especially in the options market. So a lot of people, they talk about when you start trading options is that they tell you that you want to buy cheap options and sell expensive options. Does that sound familiar to you? Have you heard anyone say that to you? Buy cheap options, sell expensive ones. It's sort of like when you go into the stock market and people tell you to buy low and sell high, right? So you probably heard that. Buy cheap options, sell expensive ones. The problem is, what does that mean? What does that mean? How do you buy a cheap option and how do you sell an expensive one? How do you know if it's expensive or not? And most people, the standard answer that you get is you look at the implied volatility. Look at the implied volatility. Okay. And you go, okay, well, how do I know? How do I know if I look at all these implied volatilities across these expirations, I have different implied volatilities. Is this high or low? So, and if I do this, can I really expect, if I look at this right now for synopsis, we're seeing 53 in the tomorrow expiration, and then 40, 42, 40, 41, 43, they're all landing about the same place. So 53 sounds like it could be expensive, okay? But it's going away tomorrow. So does it make sense for me to just say, to use that as my evaluation if it's expensive or not? So can I just sell any old option for the October 3rd expiration and be like, okay, I just sold an expensive option? Does that do me any good? And the answer is probably not. If I look at the implied volatility right here in the calls, I sell a 690% implied volatility, 200 strike call, super far in the money. Okay. And, is that a good idea? Well, they're probably going to be able to call me, right? So that's why there's this huge bid-ask spread right there. And so I can't really sell this expensive option and necessarily expect that I am going to positively make money in a single day if I just adopt this strategy. So there's a flaw. There's a fundamental flaw in people telling you to sell expensive options, buy cheap ones, and use implied volatility to tell you whether or not it's expensive or cheap. You may have also heard some people say, do a credit spread when implied volatility is high, and do a debit spread when implied volatility is low. Okay, so let me take a look at that here. Implied volatility is high right here relative to all of these ones. Let me go sell a credit spread. Okay, they say I'm bearish on synopsis, so I'm going to sell a call credit spread over here, and I'm going to say, okay, well, maybe I'm going to go close to the money, and I'm just going to sell this vertical. Did I just sell an expensive vertical? Well, guess what my sell is comprised of? It's comprised of buying an option and selling an option. And I just bought and sold a 45.84% implied volatility and a 45.91% volatility. Did I really just sell high IV? Did I just really sell expensive options? The answer is no. They're basically the same, right?
They're basically the same.
So how do I do this? How do I actually buy and sell expensive or sell expensive, buy cheap? No one really tells you. No one really talks about it. And most people end up, it's an exercise in futility because they don't know what is actually cheap and what is actually expensive. Right? So here's how I do it.
Can I guess?
Yeah, go for it. How do you
do you compare the implied volatility over the history of the implied volatility?
Okay, so you could do that. And
that
if
one
you
right
did that, then let's say, let's take a look at an implied volatility chart. So let's go over here. That's a good guess. So if I go over here and I say NVIDIA, and I look at the implied volatility, right now it's at 4564. And it looks like fairly recently, back in April, there was huge amount of implied volatility. So is it now time to buy? Is it cheap implied volatility?
Yeah, you'd have to take an average, but if it's got a real low, and like if it's got a big gap there, then I don't know if the average really means anything.
Right. So guess what happened in April? That was Liberation Day.
Yeah.
So everything's going to look low right now.
Yeah. Compared to that.
So
All right.
everything looks low right now. And so it still doesn't really help us. And if we take a look at it today, the implied volatility is where the market maker is pricing their option. And the market maker, in my estimation, and in my experience, is really good at pricing options. They don't make a lot of mistakes. They have teams and teams of PhDs. They have supercomputers that are more powerful than NASA's, calculating these things and putting out the prices and all the statistics and all the probabilities. There is a reason why the market maker basically always makes money. They're like the house, the casino. They always make money at the end of the year. Maybe not every single transaction, not every single bet, but by the end of the year, they're super, super, super profitable. Well, the market maker is even more profitable than the house at the casino. The casino, on the best odds that they have in the game, in the casino, is about 0.5%. So Graham said like 3%. He said, 53% on maybe, if you call that casino-like odds. In fact, casino-like odds are 50.1%. or 50.5%. Okay, there's not, if you're doing 53%, you're beating the casino by quite a bit. The market maker has an edge. They win over 80 to 85% of the time, right? How do I know that? Because you have this statistic that is repeated over and over again and has been verified. It's not just one of these myths that everyone believes, that over, 90% or 80% of all options expire worthless. The market maker is winning most of the time. They're really good at pricing these options. So this implied volatility over here is being priced perfectly. So whether you think it's expensive or you think it's cheap, from the market maker's perspective, which is right 80+% of the time, it's priced to perfection. Does that make sense?
Yeah.
So in reality, implied volatility is a terrible measure of how expensive or how cheap an option is. We can't use implied volatility. There's got to be some other way or something else that tells us if something is cheap or expensive. So cheap or expensive, Kane's way. My way of determining whether something is cheap or expensive. Let's go over to NVIDIA over here. And I go over here and I want to figure out what's cheap, what is expensive. A lot of people like to trade right just outside the money. So basically they call this one the at the money, the one that is just barely out, or sometimes, depending on the definition, sometimes the one that's just barely in the money. Yep. But if we take it from this one that's just barely out of the money all the way down, we take a look at something called extrinsic value. Sometimes people call it time value, but that's not super accurate. Extrinsic value isn't only time value, but is highly related to time value, but there's more stuff in it. But extrinsic value versus intrinsic value. Let me add intrinsic value into here.
Well, extrinsic is based on the underlying, right? And implied is based on the option?
Close. So intrinsic value is based on the underlying. Actually, both are dependent on the underlying. So the intrinsic value over here, I don't know, they're really far apart, but you notice that when they're out of the money, every single intrinsic value is 0. And the reason is because if you choose to exercise that option, if I choose to exercise a 190 call when the market is at 188.94, I'm a retard because I'm choosing to pay $190 per share when I can just go over to the market and get it for a 188.94, right?
Right. You're
So
paying for the
this is
privilege
not
of paying too much.
right. So it's not worth anything. And what I said earlier today, when I commented, was that it's sort of like saying, "Hey, David, give me $20 and I'll give you a black old piece of gum that I scraped off the road."
Yeah.
Would you do that?
Probably
Why
not.
would you do that? It's like that piece of gum is worthless. It's no one wants it. It doesn't have any value to anybody. If it was a fresh stick of gum, then it would have some value. It might be worth only like 10 cents, and you'd still be questioned why you're paying $20 for this 10-cent piece of gum.
Right.
But if it's a chewed up old black stepped on piece of gum that I scraped off the road, no one wants it. It's 0. It's not worth anything. And so basically that's what you're doing when you're going out of the money. You're saying, I'm willing to pay $5 for something that's worth nothing in the hopes that in the future it might be worth something. And hopefully it'll be worth more than $5. That's what you're doing when you're going out of the money. Right? And so what we're saying, and the less likely it might actually be worth something in the future, the less you have to pay for it. So are you willing to pay 15 cents for something that's worth absolutely nothing today, but in a huge long shot by 2 weeks from now, it might be worth, hopefully worth more than 15 cents. And the only way it does that is if NVIDIA goes up to 225.15, right? So that's a long shot because it's a huge distance. When I go in the money, at least I'm getting something back. So if I go for this 180 call, then I'm paying $11.60 for something that is worth $8.71. Okay, so all right, I'm overpaying, but at least I'm buying something. I'm getting some value back, not just a hope for the future. So I'm getting some value back plus some hope for the future. This hope for the future, that's what we call the extrinsic value. When it's out of the money, it was all hope for the future. When it's in the money, it is some real value today plus some hope for the future. Does that make sense so far to everyone? All right, okay. Have you ever heard anyone explain it like this before?
No.
Okay.
No, I haven't. No, but it makes sense where it's not worth quite what you're paying for it, but it's worth something. It's you're not starting from 0, but
right.
So you have some value and you've got potential value.
Yeah, there you go. So the actual how do I determine if something is expensive or not? Well, this makes it easy because I know what this is worth now, and I know how much I'm paying above that price to get it, and basically what I'm paying for that hope. Does that make sense?
Yes.
Okay. So this gives me a very good gauge of saying, is this cheap or expensive? Now, because now I can compare, I have something of substance and I have hope. This is how much I'm paying for my hope. Okay. So now what I can do is if I want to be able to compare if I want to compare on the same expiration, doesn't matter. Now it's purely extrinsic value. Okay. So over here, you can see that right there, I'm paying $5.15 in extrinsic value for hope versus say over here, I'm only paying roughly $1. But the difference here is I don't have much hope over here. And that's why I get it for cheap. Here I have a good amount of hope, and that's why I pay up for it. Over here, I'm paying even more in extrinsic value, but at least I'm buying something of substance. I have some substance, but to me, it doesn't make sense for me to buy more, pay more for that hope when actually I need less of it because it's already in the money.
Yeah.
So this makes sense. I would never choose in this situation, I would never choose the 187.5 over the 190. If my choice was between these two, I would just go for the 190. Yeah. But now if we go over here for this 430, I pay 430 or pay 355 for the amount of hope. Now I can say this is cheaper. This is cheaper than that. Okay. So guess what I can do now? I can sell. Actually, I would sell this one because it's even more expensive. I could sell this expensive one and I can buy this cheap one. And what do I get? I end up with, whoa, I end up with a debit spread. Sell expensive, buy cheap. I end up with a debit spread.
Yep.
Benefits if it goes higher. And so now I've given you a way of constructing potentially debit spreads, lucrative debit spreads, in order to take advantage of some sort of directional movement. Because now I can buy expensive and sell cheap. I just shared with you why it would be a better idea for me to sell the 187.5 rather than the 190. Because it's stupid. This one's priced stupidly. Yeah. 187 this is what we call arbitrage. 187 is priced at a stupid price, a stupid expensive price. Let's sell it. What I would hope to do is now I want to buy something that's priced at a stupid cheap price, if there is one. Sometimes there is, sometimes there's not. But at the very least, I can sell expensive, buy normal. I don't necessarily have to buy cheap. Okay, so if everything seems kind of normal right here, fine. I sold expensive, I bought cheap. And that's how I start building my debit spreads. Okay, now, even better than this. Is anyone getting a haha movement here? I hope so.
Yeah, a couple people said helpful explanation, very good. They're following along.
Great. Very good, but what if NVIDIA drops 9 points? It will be worthless too. Yes, versus what though? Yeah, it always has to be compared to what. So yes, we lose 100% in both cases. So if I sell this one, okay, I'm sorry. If I do this vertical, okay, this would be the worst vertical to do because I'm buying a one that is more expensive than the one that I'm selling. Okay, so this is a 2.5 spread, but I'm paying 133 on it. Okay, so this is technically a wrap, but it is a poorly priced wrap order. I'm getting ripped off over here. So you say, well, if it goes down below 87.5, I lose 100%. But if we did the spread that I just did, then it has to go down a lot further in order for me to lose that 100%. Okay, so they're not the same. They're not equivalent in that sense.
That makes sense to me.
Okay. All right. So now another way to take advantage of this, as I told you, that if everything's the same expiration, then all you care about is the extrinsic value. But now I can do something really interesting. I can sell over here Why? Because what I'll find is that because of the way the time decay works, we all see the time decay graphs where
the downslope or the inverted
these
triangle.
time decay, and it goes super fast towards the end. Okay. So what that means is that my extrinsic value should hold up a lot better over here than it does over here. Because the extrinsic value, as we defined it, was the hope of the amount of hope that we have for the option to become a certain amount in the money.
Right.
So if I have more time for it to do that, then I have more hope. So the measure then becomes not just the extrinsic value, because if I do just say out to November, or do monthlies, I do 187.5 versus 187.5 over here. Oh, it doesn't have it. So 190. If we do 190 and 190, here I've got 515 in extrinsic value, and here I've got 1180 in extrinsic value. And you said, Kane, that's more expensive. The November 21 is more expensive, and it will always be that way. When I go further out, it'll cost more because I've got more time for it to work out.
Yeah.
But if I divide it by the number of days that I have left to expiration, how much hope am I buying each day? How much am I paying for the hope each day? Okay, that becomes a lot more compelling, a lot more interesting, a better proper measure of it. So if I take my $5.15 and if I divide it by 15 days, I'm paying 34 cents per day. And I go over here, if I take my 1180 and I divide it by 50 days, I'm only paying 23 cents per day. 34 cents versus 23 cents, 50% more. I'm paying 50% higher price on that 17. Okay. And so what we see is that actually on a per day basis, the 21 expiration, same strike, is actually cheaper, but it's actually even cheaper than this simple calculation implies because of that time decay curve that I told you about. So
right.
in the same
speed.
Right. So in the same 15 days, this is going to decay from $5 down to zero. But this one is only going to decay from 1180 down to maybe like $7 or $6, something like that. And so actually it's less than this, but it's okay to overestimate. And in any words, it's just going to say that this is even cheaper than I think it is based on the straight linear calculation. So now I can sell expensive, buy cheap. Sell expensive, buy cheap. I've just built myself a calendar spread. Okay. And so through this concept, if you use that as your measurement of whether something is expensive or cheap, and then you use that to build your spreads, buy something cheap, sell something expensive. And then if you go and do that calculation across all these strikes at reasonable, you don't have to go so far out of the money. If you stay within a few strikes, let's say 5 or 10 strikes of at the money, and you build it across, and then you find out how much it costs you extrinsic value per day on a near expiration versus a far expiration, then you can find really expensive options to sell and really cheap options to buy. And you've built yourself a very lucrative and very high probability calendar spread.
So we have a question in here. Maybe I don't know if this is a good time to do it, but I think maybe some people are still kind of misunderstanding what you mean by expensive, because when we talk about normally if you're buying the cheap one and selling the expensive one, to some people that makes it sound like you should get a credit, that it would be a credit spread because you're you're buying something for $1 and you're selling something
Yeah.
that's expensive, so it would be $2 and you would get a credit. But what, I don't know if you just want to explain kind of how you're defining expensive.
Expensive is okay. So that's why we went over the intrinsic value. Okay.
Yeah. But
So expensive in terms of your extrinsic value.
Yeah.
And because, like I said, if I sell you a 1 ounce gold coin for $20, that's not expensive.
yeah,
You're
so
ripping me off,
we're not talking
right?
about the price of the option. We're talking about the value of the option. We're talking
Exactly.
about how much you're paying for the opportunity that comes along with what you're buying. So how much are you paying for the opportunity? The opportunity is different in each one. The price of each one is different. So you're dividing the opportunity by how much you're paying, or vice versa. And
Right.
so it's expensive for what's in it, but it's not necessarily cost more.
Right. So here, if I buy out to November 21st, I'm going to pay more dollar wise. Okay. But the value is better. The value is better. Okay. I'm going to pay more. So it will end up being a debit spread. In this case, if I do the exact same strike and I go further out in expiration, I am going to pay. It is going to end up being a debit spread. But the let's put it this way.
Well, I got a good one. So, you buy one donut, it's going to cost you some money. But if you buy 12 donuts, obviously 12 costs more than one, but each donut is less. You're getting
There
more
you go.
value. You got to break it down to donuts. Is what
Love the donuts. Everyone gets the donuts.
your value. You're paying less for each donut, but of course, 12 donuts is going to cost more than one donut.
Yeah.
Everything makes
So
more sense.
the way, and another way, the options way of thinking about it. Well, I love the donuts. Thank you. So on October 17th, if Nvidia is still at 189, this 190 is going to be worth 0, right?
Yeah.
But this November 21st one is not going to be worth 0. It's still going to have its extrinsic value. It's going to be worth $5 or $6 still. Okay. So you have something that is 0, and then something that is $5 or $6. Would you say that the $5 or $6 one is more expensive? You could call it that, but this thing's worth 0. It's not worth anything, so you wouldn't want it anyway. So actually, to pay anything for this one would be super expensive. It would be infinitely expensive, right? If you even pay a penny for it, it's too high of a price. So it's too expensive. So I don't know if that helped or not, but the donuts probably helped better. Okay. So yeah, let's go ahead and I'll use SPY for this just to make it easier. And I will show you. So this is the basis and the premises of the system that I was telling you guys. Like, because we made this realization and because we construct our things this way, we can compound our accounts very, 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 very effectively. This is why you should be paying attention. Not actually, it's like, because of this phenomena, we can make some really, really lucrative trades. Okay, so if I go over here and I say SPY, and I go just say I go out to Monday expiration, and just say I want to sell the 670. Okay. I sell the 670. That's $2.33 of extrinsic value divided by 4 days. That's 50 cents. 50 cents. So I'm selling 50 cents per day of extrinsic value. And now let's go a week after that to October 11th. I go to 670 also, and it's $4.89 of extrinsic value divided by 11. Okay. Okay, that is 44 cents. 44 cents. 50 cents, 44 cents. Doesn't sound very lucrative. Certainly, I am selling a more expensive one than I'm buying, but it's not significant.
Yeah.
That's not very compelling. So let me see what that looks like over here. Okay, so if I do a SPY and I do an October 6th and a October 13th, 670. Okay. The way, so just look at it, it's 130 versus 286. That's not even a 1-to-2 reward risk ratio, and my break evens are at 667, 673. Let's use the same expirations and look for something that is expensive and that there's a bigger contrast between the two. Yeah. Okay, so let's go over here, go back to our 6th. And I want to look for something that is kind of stupidly expensive. So maybe this one, 669, a little stupidly expensive compared to this one. So 262 divided by 4, I'll give you exact number here. It should be, I don't know, 6.5, 65 cents. Okay, 65.5 cents. And now I look at the 13th. And this is 517 divided by 11. Now I have a difference. You see that? 65 cents versus 47 cents. And so all I had to do was move one strike over. I know which ones are expensive and which ones are cheap. So I have a way of measuring whether it's expensive or cheap, I should say. That's really critical here. And so all I do here, this is exact same. I just shift it down one. That's all we had to do. Now look at this. Okay. We have a more profit, $5 more profit for basically the same debit. So still not that compelling. But my break-even points now are better. Okay. Now it's better. And more importantly is the when I move across time value. So if I say on Monday or after the next Monday, no, just say if I go out to Friday at close, okay, so that'd be my time, 1 p.m. or close to it. Okay, I should do these side by side.
Kate, I think where you might be confusing this is what we normally do with Graham and Nathan, not all the time, but many times, is we're doing vertical debit spreads where it's the same expiration, but we're changing the strikes. These are what Kane's doing here is calendar spreads where it's the same strikes, but we're changing the dates.
Right.
So maybe that's where you're getting confused.
Okay. So look at that. If I go right here to the current market price right here, that shows on Friday, if it stays at the same place, I would have made 2.6%. But over here, I made 3.1%. That's the difference. So when I go over here, if I go all the way out to Monday morning at the open, okay, I've made 25%. And the Monday morning at the open, Okay. That didn't work out for my example, but that doesn't make so well. Okay, but that particular example didn't work out for me at the later end of the time value, but it'll work better for me the less time passes.
Yeah,
okay,
yeah.
the less time passes because of that steepness of the time value curve. So if we did it earlier,
maybe because both expirations were fairly close, so we're kind of right at the end.
that's also true. Also, yeah. Okay. But anyway, so you guys get the idea. I'm able to construct more lucrative trades over here. Let's go back to Friday, 6:30 a.m. Okay, so here 1.8%. Okay, here, did something shift? Did I get these backwards? That's weird. I might have messed something up because the first one I showed you, it was the correct thing, and now the subsequent. I must have shifted something. I don't know. But in any case, that because we know which ones are expensive and which ones are cheap, we know which one is the more lucrative curve, minus Kane messing something up in the demo. I apologize for that. And then we build, basically we're able to arbitrage between expensive and cheap. And that forms the basis of the morning payout plan. And so, except we don't do these 1 week apart. What we do is we do it for tomorrow expiration. And that allows us, the short leg is tomorrow expiration. That allows us to collect every single day. So we do it for 3 to 4 times a week. They're overnight trades, so you don't have to worry about the pattern day trade rule. And we are only doing that very short end of that time curve. So I was showing you all the way to expiration, and I shouldn't have done that because we're taking advantage of the short end of that time curve where the difference is big, really big. And then what ends up happening is that we're able to exit in the morning. So we do it late in the afternoon. We exit early in the morning, usually, not always, but usually. And we're able to pull very lucrative amounts of money out. So it's generally about 13-ish% per trade is what we target. And we have a 25% stop loss. And then that allows us to compound super, super effectively. So if let me see. I don't know if I even got slides. Did I get slides, David?
Yeah, but if you don't have them, I can I can send you the link. Hold on 1 second.
That'd be great. Yeah.
Yeah, let me grab it.
We don't let them expire, Kate. I don't hold to expiration. Right? That was the thing. We hold them to very early in the curve. We make a quick pop up in the money, and then so we don't hold them to expiration.
Yeah, I just slacked it to you.
Okay, thank you. All right. So this is going to be really exciting. This is one of my most exciting programs. Yesterday, I was just telling people, someone asked me, for a beginner with a small account, where would you start? And I said, this morning payout plan. And one of the reasons why is exactly what Richard experienced, where he was able to compound a $400 account into over $1,200 in just a few months. So, of course, I have to tell you that the profits and performances are not necessarily typical, and that we can't make any future earnings claims, and that you could lose money. So everything that you're going to see here, I guess, is from a historical back-tested. I don't know why, since we have a lot of very good real data, and I will show you that as well. And so from the real trades, or I guess this is, I'm not sure if this is the real trades or this is the back-tested data anymore. I'm confused. But in any case, so 4.96 overnight, that's combined average wins and losses together. That's pretty good. 5% per day is really, really lucrative if you think about it. And if you can do that 3-4 times in a week, you're talking about 20% per week. And then you do that 50 weeks in a year, it adds up quite a bit. So because these are overnight trades, we have the average winner about 13.8% and a 77.5% win rate on over 300 signals. That is talking about the historical backtest then. Every example you're going to see here is based on a $5,000 starting investment, unless we state otherwise. And you're really going to want to see the compounding example that we have later, because that is super, super exciting. So you can get started with as little as 500. As we mentioned just earlier, that Richard started with 400 and he was able to compound his account. So we can't guarantee any specific future results. There is always a high degree of risk involved when we are trading, and please see our terms in the trading pub if you need more information. And do you want to do this part, David? I'm not sure how this works.
Yeah. We need to be realistic with you guys. Like, there will be losers. Like, there's no system that can ever guarantee 100% always going to win. There's no black box miracle system that just like prints out winning trades automatically. The purpose of the research and the strategy and the program is to give you an edge in the markets. And if you can't handle the losing trades, then you really shouldn't be trading with real money. Again, losses in trading have occurred and will occur again in the future. So just recently, superstar trader Kane Shi walked me through this new type of trade that anyone can take from their standard brokerage account. It is not some way to find the next millionaire making penny stock. He isn't chasing smoke and mirrors on the next hot AI stock. Instead, he claimed that if you enter a very specific option trade 15 minutes before the markets close, anyone has a shot to pocket a few $100 or more overnight, usually seeing the payout around 11 a.m. the next morning. Just like the data shows over and over again, January 22nd, you can see this, $629 by 11:30 the next morning. And again, on January 23rd, the very next day, another $610 by 11:57 a.m. the next morning. Or January 27th, just a couple of days later, $649 by exactly 10 o'clock the next morning. Now, as great as these quick-hitting morning payouts can be, it's not even the best part. You see, thanks to a special feature baked into the specific options that Kane's trading, we're now able to take this daily trade with casino-like odds. And as Kane said earlier, it's even better than casino-like odds, because casino-like odds aren't really that good. In other words, the stock market can end up finishing the day higher, flat, or sometimes even lower, and you still have an opportunity to profit by morning. For example, like on May 21st, anyone who placed a quick trade just before the closing bell could have headed out to dinner and a movie for the night. And while the market stayed completely flat, paying $0 over the next 24 hours, anyone following this method could have come back the next day to find an extra $610 sitting in their account. Or the following day on May 22nd, as long as someone took Kane's setup, placing the trade in the last 15 minutes of the day, they could have packed up for the evening and headed out to play some golf with some friends. And while the markets went flying higher overnight, folks trading how Kane does could have seen an incredible $1,814 by 9:32 the next morning. That's 2 minutes into the market day.
That's right. And you'll be surprised how often we hit that exact 9:32 or 9:33. It happens more often.
I remember you saying that it's just very weird how it's like literally like there's something about that 2 minute mark.
Yep.
That's crazy. And then, of course, the next day after that, May 23rd, another opportunity fired that would have taken just a few clicks to jump into. And as long as someone had the position set up the way Kane does it, they could have spent the rest of the evening doing whatever they wanted to. And while the markets took a pretty steep tumble over the next 24 hours, anyone following this new style of trading could have automatically captured $803 before 10 a.m. the next morning. Now, before we get too far along, I want to be very clear with you. Not every trade is going to work out. There are bound to be winners and losers along the way, like we talked about a minute ago. And there's no magic instant income button. But the beautiful thing about this method is that you don't have to win every trade to come out ahead. Because with the proven edge in these morning payouts, all we have to do is keep swinging the bat. And since February, when we launched this program, anyone who would have done just that could have pocketed an extra $21,500 in profit. And that's just since not even the very beginning of this year. And that is with winners and losers included. So if you can see the power in all of that, then buckle up, because over the next few minutes, my special guest is going to give you his exact blueprint of how you can start tapping into these daily income opportunities. Plus, invite you to take the newest trades alongside him this very week, targeting right around $700 by morning on each one. But not just that, he'll also take you through all of the trade data over the last 2 years and show you how a tiny $1,000 starting stake, only risking a third of the portfolio on each trade, could have already paid out $50,000, not $50,000. $100,000, not $100,000. Not even $100,000. It's gonna be a morning payout plan. We don't have a number. Now, if you give me just a moment, I want to brag about what a trading ace Kane is. Kane's no rookie when it comes to the stock market. He's been doing this for quite some time. He's a former Wall Street legend who helped manage money for $1.7 trillion firm. That's trillion with a T. Responsible for trading billions of dollars every day. We've all done that, right? Chances are, if you had retirement savings in the United States in the late 2000s, he's probably traded some of your money for you. Thanks, Kane. Now that he's walked away from Wall Street, he's been on a mission to help show everyday folks how to tap into some of the same methods that have been kept away from the average Joe. And just hear some of the top stories from some of his students following his work. Like Lorraine, who made $228,000 with Kane on a Nike put. Mark, who got in on DHR and pulled out $350 on one contract in 2 days. I'd be very happy too, Mark. Or Henry, who said, "You're amazing. This morning I cashed out with about $7,000. Damn. I got to get Henry to buy me lunch. While we've enjoyed stories from some of those people who are his very best students, today Kane is doing something totally different. He's exposing a little-known market force that normally crushes accounts and making one small tweak to turn it into what he believes is a hidden gold mine, allowing folks to target right around $700 in morning payouts almost every single day. And he's inviting you to join him as he takes the next trade right before your eyes, so you can follow along if you want to. Kane, it's great having you here today. Why don't you take it from here, buddy?
All right. Thank you, David. And let me just real quick answer a couple of these questions right here. Rosalia says she has the program. She's very happy with it, totally recommends it. And Kane always answers your questions. I try. If I see your question, I will definitely answer it. And then Kate is asking how many contracts. This is definitely not one contract. Nope, of course not. At the very beginning, we told you that this is all based on $5,000 starting stakes. So however many contracts you need in order to get $5,000 invested. And the one thing I wanted to note here, this is not compounding. From February until now, if you put $5,000 into each trading opportunity, we pulled out $21,500 in profit without compounding. So that means you've more than 4 times your stake without compounding. So your normal $5,000 stake, you've more than quadrupled your money. The amount of money that you're putting in with each one. So, and I think, how do you manage a pit? You're so polite. That seems like a loud dog fight out of place? Well, sometimes the most powerful person in the room is the quiet one. So that's all
Nice.
I've got to say about that.
Nice. That sounds like a mob line or something.
Yeah.
Watch out for Kane. Watch out for Kane.
Yeah, so thank you for having me, and thank you for being here with us. If you haven't figured it out yet, we are talking about the morning payout plan, and we call it that because we set our trades within the last 15 or 30 actually minutes of the trading day. We have a shot to capture some extra cash automatically by the time morning hits. We trade SPY most 99.9% of the time. And as David mentioned, it's usually by 8 a.m. Eastern, or sorry, 11 a.m. Eastern, 8 a.m. my time, 11 a.m. Eastern. So if you like the thought of waking up to what could be some extra bread in your account, you are going to love this. As I mentioned, many members get excited to see what the account has done in the morning. The phenomenon behind the morning payouts is thanks to a slight adjustment that the CBOE made in the options market, that until then, none of this was possible. And as I'll show you today, the slight adjustment unlocks a special feature that we can leverage for these daily opportunities multiple times per week. And this is one of the things that you guys may or may not know about me is my professional portfolio management background that David told you guys about. I'm always pulling from that experience. I'm trying to mimic what Wall Street does in my programs. So Wall Street trades overnight. They call it repo and reverse repo. They trade overnight, and it is the basis of stable income inside of a portfolio if you're a professional portfolio manager. And it's a missing piece. It allows your equity curve to be smooth rather than jagged like this. It's the secret of Wall Street. You always pepper in regular income strategies in order to smooth out your equity curve. And this is probably missing from most people's retail trading accounts. And this is why I'm super excited about this and why I really love bringing this into the mix. So if we go back and we look at what happened back in August, if you remember trading back in August, just say things were not pretty. S&P 500 took a 10% plunge from the peaks. NASDAQ was down nearly 20%, and Bitcoin was falling off the cliff. And if someone had invested $5,000, that same amount that we're talking about in every example today, well, folks who invested in the markets would have lost anywhere from $500 to $1,250. However, with the morning payout plan, it would have been the opposite. On Monday, August 19th, folks who placed a quick trade, they would have seen an automatic income clocked out of $605 by 10:54 a.m. the next morning. Then they could have gone right back to the well later that day, and they could have reeled in $629 by the next morning. They could rinse and repeat day after day. On Wednesday, it's $619 by 10:30 a.m. And then Thursday going into Friday at 10:48 a.m., an extra $602 coming in.
Kane, all in all, folks could have pocketed $2,456 in morning payouts that week. That's an extra $2,000 that could have gone towards the groceries, the mortgage, or even a savings account. All from clicking a few buttons each afternoon and watching as a position automatically closed out the next morning. That's one of the coolest parts. But folks, if you guys think that's impressive, check out what anyone could have seen the very next week. While most of the investing community was fretting a recession, global war, and the elections, all fun stuff, again, you could have tuned all of that out and instead leveraged these morning payouts using up only a few minutes each day to take advantage of them. Day one, $606 profit overnight by just before 1 p.m., even though the markets fell. Day two, another $1,781 by, there it is again, 9:32, right at the market open. Day three, $627 by 11:02, with the markets tumbling again. Tally those trades up, and we're looking at an extra $3,016 in morning payouts for the week.
Yep, that's right, David. And now let's just be extra clear because we are looking at some pretty big numbers. We are definitely not telling you to quit your job or go all in on the next morning payout opportunity. It's not meant to be a magic pill that solves your financial future overnight. And it's actually the opposite. What I'm showing you today is meant to supplement your income, and it's a chance to target what could be very steady profits virtually every day the market is open. Remember what I said about those portfolio managers. You put in steady, reliable income, especially on a daily basis, but definitely on a regular basis, that smooths out your equity curve. It's what allows you to take bigger risks in other places and still have a nice smooth equity curve and say, by the end of the month, I'm probably going to be net positive. By the end of the quarter, I'm probably going to be net positive. By the end of the year, I'm probably going to be net positive. It is the secret to staying on the right side for professionals in Wall Street. So what I'm showing is exactly that, how you can add this in to your portfolio so that you can smooth out that equity curve as well. And Kate, all those questions you just asked, they will be answered in this presentation. You will find out very, very soon. Same with you, administrator. Leveraging a very specific market reality that I don't think anyone else is taking advantage of. Now, I've worked incredibly hard to optimize this method and help stack the probabilities in your favor. I just spent, I don't know, maybe even an hour explaining to you the premise behind it, that part of what makes the strategy so powerful, being able to identify what is cheap and what is expensive in the markets and finding those arbitrage type of opportunities. And that way, over time, we have a real shot to grow our accounts. As you'll see in the compounding example, as I told you about, that Richard was able to compound a $400 account, and I was able to compound real money results, a $1,000 account. Small accounts can still compound very, very powerfully. So in other words, I do personally expect to be on the winning side far more often than on the losing side. In fact, when you add up the data, we're looking at a 77.5% win rate on this overnight opportunity. That's nearly 8 out of every 10 trades. Each one targets between $600 and $800 by the morning. And just like our data showed would have happened in July, in case you forgot, July was a horrible month for the stock market. Market and economic fears were exploding. Meanwhile, regular working folks were still getting the short end of the stick when it came to inflation. But while Wall Street and retail investors were coughing up their quarter two gains, the morning payout plan would have turned out winners day after day. In fact, let's just run through the entire month of July real quick and see what would have happened. Week one, we only traded 2 days. We had 4th of July that week. We only traded 2 days. Week two, that was 4 out of 4 trades made. Week three, again, we take some losses sometimes. We only won half the trades that week. And then week 4, we did lose 1 out of the 3 trades. And then week 5, the Thursday doesn't count because that was August. We won 3 out of 3. That is, real quick, that's 14 out of 17. Okay, which is right around an 80% win rate. And how did it tally up in terms of dollars at the end of the month? $4,645 in morning payouts for July. Remember, that's $5,000. I put in $5,000 here, 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 here. Every single one of these checks or X marks, you put in $5,000. At the end of July, you got $4,645 back. So that's nearly doubling your normal stake amount.
And that's with the losses taken out.
Yeah, that's with the losses taken out. Exactly. So if you can, so return on invested capital, 5,000 invested repeatedly, your return on your invested capital for the month is almost 100% with the losses included. Yeah.
Kane, that's an outstanding number. Think about it. The average person brings home just under $5,000 each month, but unfortunately, in today's economy, that's simply not enough to really get ahead. That's why 61% of Americans say they are living paycheck to paycheck, even as inflation cools. And it's even worse for anyone hoping to retire anytime soon. Recent studies show that thanks to inflation, $1 million in the retirement account just won't cut it anymore. In fact, you'll need an extra 800 grand. It's almost a whole other million in the bank just to retire comfortably. It's amazing how they could be off by like almost 100%. Leaving millions of people forced to delay their retirement 5, 10, even 15 years. Kane, as we've been saying for months now, this isn't the American dream anymore. It's the American nightmare.
Yeah,
By the
and
looks of it, sorry.
go ahead.
But by the looks of it, your morning payout plan could really start to make a big difference for folks. $4,645 in morning payouts for July could really make a difference. And I know that's not retire overnight type of money. It's not billionaire overnight money. It's not what we're talking about today. But that would have been enough to double the monthly income for the average person. Giving folks a little bit more freedom in their day-to-day life. And in the month of July, that could have meant stashing $4,000 of the profits into the emergency fund, booking a round of golf for you and 3 of your best friends at the local course, and covering the tab for a delicious steak dinner after the round wrapped up. If I wasn't hungry before.
So, David, it is those types of results that get me so excited about the morning payout plan. And I don't know if you guys can tell, but I love this program. It is absolutely I've been to be biased about my own programs, but it is my favorite, honestly, for beginners. It's my absolute favorite. So I can't wait to kickstart it with new trades. I can't wait to give the trades every day. And as a matter of fact, I will be inviting a handful of folks in this room to follow along with our new opportunities this week. And just as a side note, yesterday when I was in my post-market live, I explained to some people ask, can we get more trades? So you only gave us 2 trades this week. We need like 5 or 10 or 20 trades so we can make more money. And my response to that was, you don't want me to give you a whole bunch of trades. We all have, I think we all have small accounts here. No one's trading 10 million plus, right? As far as I know. But if you have a small account, you have a limited number of positions you can take. You want me to give you the trades I'm most excited about. You don't want me to just give you 20 trades. You want me to give you the trade that I can't wait to put my money into. I can't wait to tell other people to put their money into it because I'm so excited about it. And in fact, I wish that everyone's account was 10 times bigger so we could put 10 times as much money into it and I'll make that much more money. That's the type of trade that you want me to give you on every single one of my alerts. And the morning payout plan, I can honestly say that every single time I put out the alert, I am excited. I'm excited. And that's why people, when they wake up in the morning, they're excited to see what the result is going to be, because the program allows me to do exactly that, to put out trades that I can't wait to put out because I know how good that they can be and how powerful they can be, especially accumulated over time. So while I can't promise any future gains, given that we do hit 77.5% of them inside our study and our real life results match that almost perfectly, I am always confident in the next trade, knowing that we can just keep swinging the bat and taking it one day at a time. So we know that there is quite a few folks who are concerned about economy, about recession. Earlier, someone asked me, I don't remember if it was this session or the other session, what are factors in the economy that you can see in the next 3 months that might take us into recession? People are worried. Okay? And it makes sense. It makes sense to be worried, and it makes sense to think ahead. And the last thing you want is just to hold the bag when markets start ticking and just be the one who just sees all of their options go to zero. But that's why the timing of the morning payout plan couldn't possibly be any better. This partially answers your question, Kate. Not only is our money not tied up for months, weeks, or even days on end, we're in one day and out the next. And in fact, we're only in at the very end of the session, last half hour of the session on one day, and usually out within the first couple of hours of the next session. So we do get to avoid a lot of overall market risk. It is a new way for everyday folks to target a couple $100 or more multiple times per week, regardless of which way the markets are headed, up, down, or flat, answering your other question about bear markets. For example, like the beginning of January 2025, when the markets took a beating, We took $605 overnight over here, 622 over here, 654 right there. Then in the middle of January, when stocks were roaring higher, folks could have seen another batch of morning payouts with 671, 680, 634. And to finish the month strong, when stocks were going nowhere fast, well, again, we were hitting it out of the park. 629, 610, $649 over there. And when you consider all the January trades together, and some of you may be like, Kane, are you cherry picking? What about this day and this day, this day? Why don't we have arrows on every single day? Are you just show me the ones that we won? The answer is no. We only traded 10 times that month. So we skipped those days because we didn't trade on those days. And there's various reasons why we don't trade on certain days. I do have a lot of parameters to protect us and to help us stay on the winning side. And when those parameters are met or not met, then we don't take a trade. Okay. So 9 for 10 we did in January. And even though it was 9 for 10, it was still a very consistent $4,500 in morning payouts by the end of the month. So even though we took less trades, we still ended up with a very similar amount of income. That's what I mean by steady income. It is a steady program with steady results that are fairly predictable.
Now, Kane, an extra $4,505 in morning payouts for the month, that's like having another full-time job without picking up any extra hours. I know that you're a reasonable guy. You're very clear with everyone that there are bound to be winners and losers along the way. So, folks, if you're expecting to win 100% of the time and become an overnight millionaire, then this probably isn't for you. In fact, if that's you, trading probably isn't for you. But for folks who are willing to stick to the strategy, weathering the good and the bad, the results could have been really incredible. $4,500 in morning payouts for January. And keep in mind, folks, it could have happened when the markets were falling down, going up, and when they were completely flat. It seems like the perfect strategy for the current market we're in. So, Kane, tell us, how exactly does the program work?
Well, David, as you know by now, it is about flipping the script on one of the biggest market secrets right on its head. I consider it one of Wall Street's best kept secrets, even though it is hiding in plain sight and has been for decades. And we already talked about why the average person needs extra income more now than probably any other in recent history. And I even talked about how actually every retail trader needs that income component to their portfolio in order to smooth out their equity curve. Though millions of people are pushing their retirements back at this point, and it is getting worse. Now, a lot of folks have turned to the stock market, especially since COVID, to try to catch up on their retirements or supplement their income with active trading. And I think they have the right idea. I mean, that's what my entire career has been that. My entire living is that. But unfortunately, most people are using the dead wrong approach. Because contrary to what most people think about the market, it really doesn't move that much. So if we take a look at this graph, I think your eyes will really be opened. What you're looking at is the S&P percentage move every day for the past 10 years plotted onto a chart. And what you see outside of these two black lines is where the S&P moved 1% or more. And what you look at in the middle is where they moved 1% or less. In other words, it just didn't really move all that much. And as you can quickly see from this chart, the S&P 500 is far more likely to stay inside a 1% range on any given day than it is to make an outsized move. And that's because most of the time, markets just don't move a ton from day to day. And as a matter of fact, it stays within that 1% range more than 75% of the time over the last decade. And coincidence, our win rate is a little bit over 75%.
I wonder how that happened.
Yeah. So here's the problem that most folks face. If you're trading options and you're holding them longer than an hour, you're going to need that 1+% move. The problem is that it just doesn't happen that much. So investors turning towards the stock market is the right idea in my view, but almost all of them are learning a very difficult, wrong approach if they want a chance at succeeding. So I'm sure just about everyone here has traded options and watched them melt away because the market didn't move enough. You may have gotten the direction right, but you just didn't make any money. And that's not really your fault, because you may still be picking really good trades. It's just that the directional trading is doomed when there's not enough movement. And it's not just me saying this. Studies have shown it's nearly impossible to actively trade successfully because of this. One CNBC report said that we show it's virtually impossible for individuals to day trade for a living. We find that 97% of all individuals lose money. That's a crazy statistic. So here's the key. Instead of chasing market direction, buying options, and hoping for the best, we're just flipping the lack of direction from day to day on its head. Remember that studies show that active traders are losing 90+% of the time. And it's no surprise, because they're buying short-term directional options inside a market that just doesn't really move directionally all that much or all that often. And over time, that is a recipe for disaster. But if you could trade in a way that relies on the market not making a huge move, like the data shows it is so likely. Remember when we talked about those market makers, how they price their options, while they win like 80-85% of the time? What do you think they're doing? They're relying on the market not making a huge move and blowing out of that implied volatility range that they did. And what did we say about having casino-like odds? What did we say about being the house or being on the same side as the house? We are positioning ourselves in the morning payout plan to be on the same side as the market maker. Okay. So how does that sound? And again, when I say market maker wins, 80, maybe 85% of the time, and our win rate is pretty close to 80%. So in other words, we're doing the exact opposite scenario of just about every other trader. And that turns this shocking reality into a hidden gold mine, just like it's a gold mine for the market makers. And that's what we do. That's exactly what we do in the morning payout plan. So that means the market can bounce up and down. It can go nowhere at all, as long as it doesn't make an extreme move in any one direction, which, as you know, it tends to stay in that range 75% of the time. We should be able to close out with another winner automatically in 24 hours or less. For example, let's take a look at what happened back in December 2nd. The market bounced all over the place, but it never came close to threatening our morning payout opportunity, which would have allowed folks to capture another $656 in under 24 hours. And it's because all we need is for the market not to make a shocking move one way or the other. And we don't even need to predict where it will finish on the day, because we're usually out within the first 90 minutes of the day. For example, the next day, which was December 3rd, folks could have grabbed a $617 winner by 10 a.m., even though on that day the market actually ended up finishing a lot higher. It didn't matter. Folks would have already been on the sidelines with the morning payout already locked in. The next day, December 4th, markets actually took a tumble overnight, but again, it never went outside our safety zone. And anyone following along would have automatically collected their third consecutive payday for the week, all while eating their lunch.
Well, Kane, imagine that. Imagine being out to lunch with friends, not paying attention to the charts at all. Then you hear a little cha-ching in the pocket, only to find an extra $615 deposited in there. That would be one heck of a feeling. And then the next day, December 5th, another great win, right at 9:32 again, $611.
Yep.
All in all, for the week, that's a sweet $2,569 in morning payouts. Kane, if you were someone that I met 2 days ago on the street, I would probably be pretty skeptical that you were getting these kind of results. But given your extensive accolades, including your studies of applied math and computer science in school, learning macroeconomics under Peter Navarro, the assistant to President Trump, I have to admit, I'm really loving what you've done here and how you've totally flipped the odds in our favor.
Yeah, David, my team and I have worked super hard to accomplish that mission. And that said, I want to remind folks that no strategy wins 100% of the time. You and I, we both know that. I always tell people that you never go all in on a single position and you never over leverage yourself. But with that said, here's another great part to the morning payout plan that I haven't even been able to mention just yet. Most trading strategies, they have a major flaw, or the ones that are trading for income, they have a major flaw. They do a great job of picking up winners at a high clip, but when they lose all of their gains. So if you can imagine, there are income traders out there, there are income alert services out there that win 90% of the time. That's better than my 77.5 in the morning payout plan. The problem is, number one, they're not trading overnight. They're not trading every single day. They're generally, say, like 1 week or 1 month trades. But let's just say 1 week trade. So if you can imagine, you win and you win. You're winning 90% of your trades. You win 9 in a row. And then on the 10th one, you lose. But on that 10th one, you wipe out all the work that you just did over the previous 9 weeks. You just wasted 2.5 months. That's almost an entire quarter. You just wiped out all of that. You might as well have just not done anything that quarter, because that one loss just completely wipes out all of those gains. So, and that's really, really frustrating. And so I'm sure you've all been there. I think that we all have. We've seen those strategies and we've experienced them. We've tried them for ourselves and we've seen that happen. So luckily, the way I designed the morning payout plan, we should never take a 100% loser. We've never taken a 100% loser. We've never even come close to taking a 100% loser in the program. As a matter of fact, I have a very strict stop loss set at 25% of my investment, answering one of your guys' questions in there. All right. And that means on the rare occasions where we're wrong, it happens, we were wrong about 22% of the time, we do not wipe out our accounts. Instead, it's just one small setback before the next sprint forward. And I'll have an even better example of this later on. Okay. The most important part is to stick to the strategy, knowing that over time, the odds stack up big. And even better, we're trading some of the most liquid options available. So you shouldn't have any issue when entering your trade the first week. No one ever has any problems entering or exiting the morning payout plan. Some people ask, do I only trade SPY? And I answered 99.9% of the time, yes, we trade the SPY. They're super, super, super liquid. And remember, the market can bounce up or down or go anywhere at all, as long as it avoids making an extreme move in any one direction, which we do know it tends to stay within range 75% of the time. We should be able to close out another winner automatically in 24 hours or less. So let's show you again, just because we have plenty of examples. November 18th, we placed a trade before the closing bell. As long as the market stays in their normal range, we can get paid. And sure enough, anyone who did that would have grabbed $600, deposited at 11:14 a.m. Then the next one, November 19th, you set your trade. You use the extremely liquid options that I give you. Then you clock out for the night, knowing that more often than not, you should be able to wake up super excited, if you're like other members in the morning payout plan, to a morning payday. And just like what happened over here, $615 took a little longer that day by 12:52 p.m.
Oh,
and
no, 4 hours.
Yeah, yeah.
How did people survive?
Yeah, exactly. So next day, we rinse and repeat. $1,049 morning payout, 2 minutes into, again, that magic 2-minute window. We were able to pull out outsized gain in that case.
Kane, that's another $22.65 in morning payouts picked up for the week. And folks didn't have to break a sweat or spend extra hours in the cubicle. And Kane, based on your full 2 years worth of data and analysis, I have to say that these morning payouts are nothing short of remarkable. In fact, a tiny $1,000 starting stake, only risking a third of the portfolio on each trade, could have already paid out 50,000, 100,000. Nope, even more. Now, I know you'll cover the entire trade data set in just a moment. But first, I have to ask, are these some sort of risky naked options?
Nope, I would never trade that way. I never expose my people to unlimited risk. And again, my risk is always capped at 25%.
Well, are they iron condors or butterfly spreads then?
No, they're nothing complex like that. The options I'm using in the morning payouts are much simpler, and getting them started is no more difficult than any other trade. In fact, I already went through a whole explanation of the trades that I do and exactly why I do it, because in this manner, we're able to find cheap options and expensive options very, very easily and take advantage of that pricing. And of course, they are calendar and diagonal spreads. So in the next few minutes, I would like to invite folks to tag along for the next morning payout opportunity. And if it all works out, we should be able to pocket some extra cash automatically by the time the morning hits, usually right around 11 a.m. Eastern. Like on September 23rd, we got $608 by 10:54. Then the 24th, $607 by 10:04. Then on the 25th, $615 by 10:21. September 26th, $606 by 10:36, on and on. So if you've been following along today and you're ready to jump into the next morning payout opportunity, then I'd like to invite you to join me in the morning payout program. This service is solely dedicated to targeting extra income by entering just before the closing bell and automatically closing out the next day, usually by 8 a.m. on average. And it's thanks to an age-old market phenomenon that we're able to flip on its head. In just a moment, I'll show you just how incredibly powerful that can be for folks tuning in right now, whether you've been investing for years or you're just getting started. Now, if you do take us up on one of the limited memberships today, every single day that we have it set up, I will give you my very best morning payout opportunity. Like I told you guys earlier, the biggest favor I can do for you guys, for my members, is to be excited about every single, I can't wait to give everyone this trade because I'm so excited about it. I believe in it so much that I think everyone's going to make a whole bunch of money. And so that's what I do in the morning. That's what I do in all my programs, but the morning payout plan especially, it's like every day I am super excited to give it out because I know the power. I know what it can do. I know the program and its compounding capabilities. And even if you don't compound it, the results have already been incredible. So every day I do give you my actual very best morning payout opportunity. And I do personally recommend it to my closest friends and family. And I do trade it in my accounts and for my family's accounts. I actually do. I put my money where my mouth is. And I am excited to do it because the morning payout alerts, they're just so powerful. And that typically means that around 3 to 4 morning payout opportunities per week, each one primed to pay around $700 by the morning, just like we see here on the 18th, 19th, and 20th. We got an outsized gain on that 20th. And once I confirm the data, I type up everything for you in an easy to follow entry alert, walking you through it step by step. You can expect to receive the notification by email, by cell phone, by telegram, whatever you like. And if you like the opportunity, if you're excited like I am about the trade, you can go ahead and fire it off. And of course, as I mentioned earlier, inside the alert, you will see the automated exit plan. So ideally, your brokerage will cash it out for you in the morning when the profit is hit. And my goal is to make it as hands-free as possible, as the vast majority of our members have experienced so far. It really is just set the exits and you're done. So it is pretty much hands-free.
Yeah, absolutely. Well, Kane, it sure looks like you're doing exactly that. Automated exits, including profit targets and stop losses, that takes all the guesswork out of it. And given your track record, I have to imagine some students will start seeing results right away. Just like some of your top students have in the past, following along with your various publications. Like NC, who wrote in, I bought this program 2 days ago. I have one active trade of over $800. And Scott, who was up $19.50 on his closed trades. Or Don, who said it's hard to be upset with making a 250% return. I would think so. $3,000 profit. Thank you, Kane.
Yeah, David, I love nothing more to hear stories like that from Scott, Don, or Nancy. And I really can't wait to hear from you tuning in right now. It does get even better. I know that some of you here work full time. Even if you don't, you may not be around a computer all the time. So you don't have to feel like you have to be at your desk all day long. And that's because I post the trade every day at almost exactly the same time. It's always right around 3:30 p.m. And that way, you know exactly when to expect it to come, so you can schedule around it. And you have plenty of time to get in before the closing bell. There's still half an hour of trading left. But what if you forget to check the alert until after 4 p.m.? Someone asked this in the chat earlier. We've got you covered because we are using very, very special liquid options here. They are often available depending on your broker in the after hour markets, at least for the first 15 minutes. So in the morning payout plan in our members only class, I do walk you through all the specifics of the strategy, plus how you can enter up to 15 minutes after the market closes, thanks to the small tweak in our options order that allows us to trade after markets. That way, if you're tied up at work, you're busy playing with your kids, or you just forget to check your cell phone, you don't have to miss out. For example, like on December 9th, you could have received a trade alert right on time at 3:30 p.m. Eastern and woken up from a nap by the pool minutes after the closing bell. And instead of being too late for the trade, you could still have jumped in on the options. You could have placed the trade in the aftermarket and automatically clocked out with an extra $611 by noon the next day. Then the following day, December 10th, the alert would have come right to your email, cell phone, and Telegram with plenty of time before the closing bell. But maybe you're late to see it because you're enjoying an afternoon stroll with your family. Well, that is not a problem with the morning payout plan. Thanks to the method I'm using, we buy ourselves a little extra time, so folks still could have entered even after most people assume the markets were closed for the day, and come back to find $649 in winnings sitting in their account by 9:33 a.m. this time, 1 minute later, the very next morning.
Well, Cade, this is a lifesaver. With these morning payouts, folks are going to get a little extra grace on their entries with the extra time. And I don't know of any other program out there with this level of flexibility, and I do love it. You're always able to find nifty ways to make trading easier for folks that they never could have imagined, and most importantly, profitable too. Like John R., who said, "Thank you, Kane. I've enjoyed your training sessions. You have given me more confidence, which is super important. You're very patient when explaining your system." And then there's Henry, one of your top students, who made a little over 10 grand. Thank you, Kane. I would think so. And I can't wait to see the feedback from some of the folks who get their hands on the newest entry today who are in the room right now.
Yeah, David, the morning payout program is going to be a ton of fun, and I hope everyone does join today. But before I open the doors for new members, there is something else that I should mention. And someone asked what happens if we gap down on the morning. Well, that happened yesterday, didn't it? Yesterday, we had the government shut down and the markets gapped down. It didn't matter. We still made our full profit in the morning payout plan. So what I'm about to show you is going to take the value of the membership to a whole new level. So you may have noticed that I don't blindly trade every single day in the markets. Like I said, it's normally 3 to 4 trades per week. And that's because the morning payout alerts are specifically designed to only activate after a very specific set of option data triggers in the markets. And our real trades so far since launching, 21,500 in profit. Again, that's without compounding. That's a straight $5,000 into every single opportunity. No, you could have more than tripled, quadrupled. You could have more than quadrupled your starting amount.
I mean, that is more than triple, but still.
Yeah, that's true. Right? Yeah. So in order to gain an edge that strong, I don't just deploy things willy-nilly. In fact, I'm never willy-nilly about anything when it comes to the market. So I don't just pick any option. And after extensive research and testing, my team and I developed a system to only isolate the most optimal entries and it's designed to keep us out of ruts when something weird happens in the markets. And we only put our hard-earned money to work when we're extremely high conviction in the opportunities. And it's just too much to cover today, and we can't give it out for free anyways. But if you take one of the limited memberships in the morning payout program, I'm going to give you the inside scoop. There is something about me that maybe you guys know, maybe you guys don't, but my members certainly know, is I hold nothing back. I have no true secrets. If you ask me a question as a member of that program, I will answer it. I won't hold anything back. I will give you the full actual details and down to the T. And I'll show you all the data behind it. And I never answer anything if I don't have the data to back it up. So earlier today, in my other program, people were asking me, so what about this? And I haven't run a study on that. So I don't want to just give you an answer. I have what I suspect, but I'm not going to say anything until I have the data to back it up. So I'm always transparent. I give you all the details, and I hold nothing back, and I'm just an open book in that regard. Yeah. So the morning payouts unlocked will show you all the data, and it takes into account 4 market corrections. So whoever asked me earlier about what about bear markets, what about this, what if it opens down, whatever, this takes into account 4 market corrections: 1 year market chop, a full bull run, high inflation, low inflation, tariffs, economic conditions. Okay, we did this data for 10 years. What happened in the last 10 years? Now it's 2025. That goes all the way back to 2015. Was there a significant event that happened? Maybe halfway, midpoint, maybe called COVID. This talk takes into account COVID. We traded this through, we studied it through COVID, and it still came out on top. Okay, so it proves that it was designed to work regardless of what's going on in the world. And as I will show you, it works amazingly well on a few other tickers as well. Now, I'm sure you're on edge with the morning payouts plans unlocked, or the edge. With that edge, you could easily, or I could sell the morning payouts unlocked for $2,000. 1997 is not a problem. With the edge that we're showing you here, that all the details in there, you can compound things, $400 accounts into $1,200. You can compound 1,000 accounts into 4,500 in just a matter of months. It is worth at least 1997. But of course, as a new member today, you can access the exclusive data and methodology for free and hopefully apply it to some of your other trades as well. So I hope you can see that I don't believe in forcing trades. I mentioned how people wanted me to do 20 trades a week. I don't force trades. I'm not a big risk taker, and I want to be excited about the trades that I give you. I want to be like, I can't wait to give this to everyone. I can't wait to put my money behind this. I can't wait for other people to put their money behind this because I believe in the trade so much. Okay, so I don't believe in forcing trades. If I'm not that excited about the trade, I will not put it out. I don't care how much the members complain to me. If I'm not excited about the trade, I'm not putting it out.
Well, what I usually try and tell people when they say something about being disappointed, oh man, no trade today or whatever, I say, I understand the disappointment, right? Because it's exciting to trade it, but just flip that on its head the same way Kane's flipping this the trading strategy on its head. If you stayed out of it, that means it probably would have been a losing trade. So would you rather have a losing trade, or would you rather have no trades? Right? Like, I don't think anybody's looking for losing trades, but we can give you plenty of losing trades.
Yeah, right. Those are easy.
Those are easy. Yeah. So just be grateful on the days that are skipped. I know there's like that fear of missing out, or more like just kind of disappointment that, oh, we didn't get an opportunity to do this today, and I like doing it. That makes sense. But just be grateful that Kane is somebody who's not going to just force a trade so he can say, oh, we took 400 trades this year, just like I said we would. He'd rather only give you the trades that he really has confidence in, and that's more valuable than taking that extra trade that week.
Yeah, absolutely. And the value of skipping those trades, I think when you see the data, you'll be blown away. Right. So we were able to take a $1,000 account in that study to over $100,000 in just 2 years time. So I think you'll fully understand why I prefer to stick to my rules. I never throw out a long shot or a Hail Mary. Okay? I will just do the trades that fit their criteria and the ones that I'm excited about. So taking these trades does take just a few clicks in your brokerage account. And if you're brand new, you will become a pro in no time because you get an opportunity to do it almost every day. You'll get plenty of practice. So all you need is a standard brokerage account, an internet connection, a few minutes to set the trade before the end of the day. Of course, if you have any questions about the membership, the strategy, the trade alert information, which brokerages work best, I'm going to include a free pass to our customer service live trade room where top team members are live in the Zoom room 10 to 1 each day. Cam and Gustavo, they're excellent to answer any of your questions.
Well, Kane, I'm really falling in love with these morning payouts. And just when I think it can't possibly get any better, you pull a number like this one.
Yep.
Clearly, we're looking at a pretty stacked membership here. And I know some of our colleagues have charged an arm and a leg for something this valuable. So, Kane, what's it going to cost for the folks in the room to join today? Maybe $7,500?
No, you can forget about paying $7,500. Forget about paying even $5,000. In fact, for members who join right now through the main website, you can get everything you've seen for $39.97. But if you're watching this webinar right now, do not leave because you will get a far better deal. And we're not talking about saving hundreds of dollars. We're talking about saving thousands of dollars. So for new members today, I'm going to offer 2 special bonuses to kick off the brand new morning payout membership. See, after analyzing more than 300 trade opportunities across different market conditions, I'm blown away by the results from morning payouts. If you account for all of the trading examples, winning and losing trades, anyone who started out with just $1,000, after 2 years, if you compounded it by scaling in a third of your account into each trade, would already be at $115,221. And when we say already, that was from 2023 January to 2025 January. Okay, so 115,221 in profit. So let's just say that again. You start at 1,000. You scale in a third of your portfolio into each trade since January of 2023. By January of 2025, that was $115,221 in profits in the morning payouts. So you could average that into per month, 4,600 if you wanted to, but when you're compounding, it doesn't really necessarily make sense. It's just over the last 2 years, you could see that amazing growth. And there is a couple of reasons for that. Number one, the system does go on long winning streaks. Number two, the losers tend not to come in pockets, but even if they do, we recover from them very quickly. So you can see this one, it was down 1,200, but within 2, I've made it back up. What if you have many in a row, Kane? Fine. Look at this, 3 in a row. What is that? That's minus 27. Well, that's about minus 3,000 or 3,100. 1, 2, 3, 4, 5. 5 times 600 is already 3,000 times plus all these little things added up together. That's over $3,100. So 3 losers within 5 trades, we made it all back. Of course, we saw another loser, but within 2, we made it all back. Then it's all profits from there. We recover from losses quickly, even if you have a cluster of losses like this. Minus 1,200 plus 600. So we're down 600. Minus another 1,600. Okay, so that's minus 1,800. 1, 2, 3 trades, you're up 2,200. So now you're positive 400. You lose another 1,200. 1, 2 trades, you're over it. You recover very, very quickly. And these are daily trades. So you don't have to wait weeks and weeks and weeks for this to recover. It happens very, very, very quickly. And so all of these characteristics are what make it really, really, really excellent compounding. And so here's the thing with that type of data and edge in the stock market. And when you see stuff like this, you don't have to get afraid of losing. We lost. Yeah, but we make it back so fast. Within a week, we've made all that money back. All we have to do is keep swinging that bat, keep swinging that bat, keep swinging that bat, keep taking the trades, and they make up for themselves. So with that type of edge in the stock market data, I hope you can see how exciting it is, how excited I am about it. I'm sure I could sell this as an elite service for $39.97 per year or higher, no problem at all.
Yeah,
but we do have something better in mind. The first one is a 50 for 50 bonus. I want to reward for those who take action, the ones who see the opportunity and don't hesitate. That is what Wall Street, that's what they reward as well. That's what the market rewards. So if you exhibit that winning behavior, I want to reward you. And we're running a flash sale for the next 50 minutes. We're going to cut the price in half, 50% off. Okay. We do have a bonus number. So actually it's not going to be $39.97. It'll be only $19.95 for the whole year. Each alert is that exact system that I showed you that had the power to compound $1,000 into 115 over 2023 to 2025. That averages about $700 per opportunity if you're putting in $5,000 into each trade. And for the first folks in the door today, it will get even sweeter. You can get a second year for only $4. You pay $19.95 for the first year. You pay $4 for the second year. You end up paying $19.99 for 2 years of access. That's the same 2 years that we showed from 2023 could take $1,000 into $115,000.
We've never sold a second year for $4.
Yeah. It's a huge deal.
The decimal place is in the wrong spot.
Right. Yeah. Maybe a couple zeros after that. I mean, that's what we normally do, right?
Yeah. Somebody screwed up. All right.
Yeah. So in order to guarantee your extra year, not for free, for $4, not for free, you really need to be one of the first action takers today. So I'd really hate for you to lose that $4 opportunity. That's an amazing deal just because you waited too long. So once the timer hits 0, the second year deal is off the table. So you do want to take advantage of that.
Well, this just keeps getting better and better, Kane. Every slide is better information than the one before. Folks are saving $19.91 when they sign up for a second year because you're only charging $4. And I'm just thinking back to some of the results from each month that we did earlier. With January was over $7,700, and February was over $9,300, and March was over $5,800. I mean, there's huge numbers. All in all, it would have been more than enough to recoup the cost of the subscription. I don't even know how many times. Still have $20,900 in profit left over. It's crazy.
Yeah. So it's always my goal to help folks cover their subscription costs as fast as possible so they can start earning real cash. Yeah.
Well, I think you've had plenty of top-notch students do that before with your other services. And, like Ray, who did it after one trade, already made my membership fee on the first trade. Thank you. And,
that's our goal always, right? You get to the profit as fast as possible. So our focus is on you guys next. And like I showed you today, it is a very different way of investing. It is very powerful. It does come straight from Wall Street, directly from my experiences in Wall Street. And so whether you're a financial expert or you're newer to trading and investing, if you want to learn how to get started to target this type of income from the stock market multiple times each week, I urge you to be one of the first members in the door.
Well, Kane, the team is going to drop a link here in just about 15 seconds, or actually I'm going to drop it for them. And folks, it's going to go quick, which also means we'll most likely have to bring it back at a much higher price, closer to that $39.97 per year. So when we drop the link in the chat, get ready to click it, join right away. Are you ready for your very first morning payout alert? Don't be late on today's special pricing. Click the link in the chat. Go to tradingpub.com/alert. or call 904-706-3539. And I'm just going to also pop that up here. Give me 1 second. I'm going to pop that up in the little alert thing we have here on this platform also. All right. 3 to 4 new morning payout opportunities each week. Go to tradingpub.com/alert or call 904-706-3539.
Yeah. So, David, when I first saw the power of these morning payouts, I knew I had to rush it out to the public. And so far, I'm hitting live trades with 77% accuracy. And after first weeks of trades alone, folks could have earned $2,313 in payouts. That's more than enough to cover the cost of it. And I do mean what I say. When I'm an open book, I'm always available. Jeff over here, Jeff64, he made a comment over here. I'm an open book. I'm willing to read it out loud to. I don't know if everyone can see it, but he said he was a VIP member of 4 months and he stopped trading it 2 months ago because he asked a question regarding asking for clarity regarding a trade that got stopped out. I don't remember this incident, Jeff. I do remember a couple of weeks ago, somebody asking me, I don't know if it was you or not, asking me or asking through customer service, then asking me for clarity about a trade that stopped out. Frankly, the answer was flippant. It seemed like the coach mentor couldn't be bothered by the student, not the way a customer paying $3K feels was appropriate. Come a long time to come back since I'm a VIP, but not a fan at the moment. Can't disagree with you more about answering questions and being an open book. So I'm willing to read that out loud. I really am open. And I'm sorry you had that experience. And I don't know, was that directly with me? Because I don't remember that incident. I don't remember being flippant. There were 2 times in this program specifically for Thinkorswim users where Thinkorswim users got stopped out when they shouldn't have been, where the market didn't actually go below the stop, but the Thinkorswim said that they did, and then they got stopped out. I went to bat for my members. I was on customer service for 3 hours, 2 or 3 hours, arguing with them, discussing with them, just saying, show me. I did not accept any of their answers. I finally got up the chain to a senior manager who showed me the microsecond data, order flow. And I posted to my Telegram channel for all the members to see the data that I was given by Thinkorswim. This is not something that they give out to anyone. I argued my way up the chain until I got that information. And they showed me for 5 microseconds that bids were taken out. And then a low ball bid was put in place for 5 microseconds. And that was well below our stop. And then anyone who put in the stop got stopped out. But they didn't get stopped out at that low ball bid because it was only there for 5 microseconds. They got stopped out at the market price when all the bids came back, which was still, unfortunately, at a loss, but it wasn't a giant loss. It was a small baby loss. And then later on, the market kept on trading and we hit our full profit. That only happened with Thinkorswim, where 5 microseconds of bids being pulled and a low ball bid being put in place allowed Thinkorswim to legally be justified in taking out the stops and closing people's positions out. That happened around August 23rd, and it happened at around September 20th, like last week. Okay, so it couldn't have been 2 months ago, where it would have been at most 1 month ago where this would have happened to you, Jeff. And so because of that, they were justified in taking out. And that those same incidences, they would have been shown to every single broker. But Thinkorswim was the only broker who decided to take all of their customers out on the stop. Twice it's happened in a month now. So I started recommending to my Thinkorswim members that, hey, let's not put in our automated stop anymore. Okay, let's just watch it carefully. I will watch it carefully and I will alert everyone if we happen to get stopped out. And then you can stop yourselves out if that happens. And that way we avoid this type of situation. But it's for 5 microseconds, and that's exactly what happened. And it's on my Telegram channel. I went to bat for you guys, for my members, to get all of that data. That's not data that they will show anyone, right? And it was very difficult to get them to show it to me.
I bet.
So yeah, so I'm sorry you had that experience, Jeff, and I'm sorry that caused you to stop trading. And I hopefully you were, I mean, if you're a member for 4 months, I got to imagine that you're quite profitable up until that experience. And now that you're back, I hope that you continue to make a lot of profits. I'm sorry that you thought I was flippant on anything. I don't remember any direct contact with you for you to feel that I was being flippant with you, but I'm never flippant with any of my members ever at all. So I apologize for that. I apologize that was the impression that you got. And I hope that you continue to make profits with the program since you are a VIP member.
And I did give him my email address in case there's anything we can do for him to mitigate the situation or whatever. Just send me an email and we'll see if we can make it right, or at least get you back into whatever it is you want to be doing. But yeah, and we, there have been a number of people in the chat already saying that their experience was positive. Administrator just said Kane is same level as Roger with answering questions, very friendly, very quick, always tries to solve if there's a problem. Not many will do that. And it's funny that you made that correlation, because actually, and somebody else asked, where'd you find this brilliant guy? And the answer to both of those things is that Roger brought him into the group. So it's funny that you made that correlation there. But anyway, this is really great stuff. Even after everything, the first 4 trades would just be gravy on top. And given the feedback that we've already seen from hundreds of your students across the board, I can't wait to see what folks have to say after jumping in on the morning payout program from this webinar. And maybe it'll be like Carlos, who said already paid for the access fee, works great. Or David, what a great name, out for $2,029. This is a great way to start the week. Have a great day, Kane. And Sharon said, I just want to thank you for the alert. I made a sweet $1,732 profit. Very sweet trade. And how about Art, who wrote in, thanks, Kane. So far, I've made over $8,000 on my trades. Well, that is a lot more than you're asking for this program. So grab the 50 for 50 bonuses right away. Go to tradingpub.com/alert or call our team at 904-706-3539. Or on that webpage, you can get the year for $19.95 or 2 years for just a insane $4 more. $19.99. When we have a price that says $19.95, the upgrade from that is usually not still under $2,000. $19.99 for 2 years. That seems like a no-brainer. Yeah. And folks, once you take one of those specials and click the button, don't close the second page, because on that page, you'll get a unique invite to upgrade your membership to lifetime. No renewal fees ever again. And legacy access, where you can pass the program off to a friend or family member anytime you want to for free. Plus, lifetime members will get access to bonus trainings showing you how you can start unlocking even more of these morning payouts on a handful of stocks each day. That's like a shot at 3xing the earnings potential because of the extra tickers. But this extra bonus is only available to the lifetime members, and I must warn you, we will not be running this discounted lifetime price forever, so get yours today.
Yeah, that's right. So if you upgrade to lifetime after joining, you will save thousands. And I'm sure, if you're not happy, just like Jeff, if you're not happy, we'll do what we can to make it right and make you happy. Hopefully the results themselves are at the very least making you happy, and you're making plenty of profit. So go to tradingpub.com/alert or call 904-706-3539. What will the new trade look like? Well, only the members get to find that out. And while we can't promise any future gains, look how consistent the morning payouts are. So remember, the market go up or down anywhere at all, as long as it doesn't go to an extreme which we know it happens. It doesn't go to an extreme about 75% of the time. We should be able to close out another winner automatically in 24 hours or less. So if we take a look at what happened in December, it's December 2nd, market bounced all over the place. It never came close to threatening our morning payout opportunity. And folks would have had a chance to capture $656 in 24 hours. The next day, the market ended up finishing a lot higher, but it didn't matter to us because the morning payout members were already on the sidelines because they already collected their $615. And that was thanks to our automated exits. The next day on the 4th, the markets actually took a tumble overnight. It never went outside our safety zone. So anyone following along would have automatically collected their 3rd consecutive paycheck for that week, all while eating lunch. And then the next day, another great win right at 9:32 a.m. That same 9:32 a.m. again, $611. And Amex real fast, one of the bonuses that we included is the morning payouts unleashed. So I show you exactly the methodology, how you could construct this for yourself as well. So yes, like I said, I don't hold anything back.
And we're going to get to all the other questions. I actually was copying them down so we didn't have to scroll back through eternity. Okay. So I have like a dozen questions copied down. But what you just went over would have been another $2,560, $69 in morning payouts after a single week. Those are crazy numbers those are individual weeks we're talking about, not months. We're talking about weeks. And again, more than enough to cover the 2-year fee in only 1 week. Folks, if you haven't signed up yet, I think you should really consider doing that right now before that $4 turns into 400 or 4,000 or whatever they're going to correct it to after they realize what they did wrong. This gravy train is about to leave the station, so you better be on board. But just remember, this deal may not last long. There's the bonus 50 for 50. We're rewarding those who take action today. The ones who see an opportunity and don't hesitate. That's why for the next 50 minutes, we're cutting the price by 50%, half off. And bonus number 2, your second year for just $4. If you're one of the folks that are in the door today, we're cutting it for the second year, just $4. So that means $19.99. You get 3 to 4 morning payout opportunities every week for the next, I want to say 104 weeks, if my math is correct.
That's right. Yeah. That is right.
All right. After the 50 minutes is up, my team is going to be taking the second year for $4 deal off the table. So make sure you get in now if you want to be able to take advantage of that. Go to the URL or the phone number that we've thrown at you about 100 times already.
Yeah. And remember, guys, I know some of you are newer to trading options, and that's perfectly fine. Remember, we're not doing anything super risky. It's not super complex like an iron condor or butterfly. It is fairly easy to set up, as I showed you in the educational portion at the beginning. So I will show you how to automatically exit if you like, and that way you're never left glued to the trade. And everything is covered in the master classes and ongoing trainings that I have for you guys always. And remember, this is important detail. Customer Service Live is there for you for any reason. If you have any question, you can go to Customer Service Live and Cam or Gustavo will help you out. Or you could write into customer service and they'll help you out. Or you could email me at kane@investpub.com if you have any direct questions that must be addressed by me. So this is a great resource. They are there every single day, and I highly recommend folks take maximum advantage of it. They are fully trained up. They know exactly how this program works. So again, 2 years of access is still under $2,000. It is crazy, crazy, crazy deal. Go to tradingpub.com/alert or call the number to get started.
Well, Kane, this is definitely a no-brainer at this price, and I can't wait to tune in for the new trades. But really quick, before we open the chat or go to the questions there, let me ask you a few questions that we get all the time, and that probably a lot of people that didn't even chat in are probably also wondering. And we covered this briefly, but once again, how much money is needed to trade this program?
Yeah, so the average trade is around $300, so it is very affordable for anyone, even if you're starting out with a small account size, or if you're like Richard, who wrote into me today and said that he started with a $400 account and was able to compound it.
Wow. So, we talked about the fact that, we're buying it tonight. We're getting out of it tomorrow morning. That's something like 14 hours. Is this day trading?
No, it is not, because we are entering and exiting on separate sessions. So if we're buying it today at close and we're selling it tomorrow at open, those are two separate sessions and therefore not considered a day trade. It is overnight, but it's not a day trade. We don't have to worry about any PDT rules.
That's awesome. And I'm sure every single trade will be a winner, right? Guaranteed, promise.
Yeah, that's right. Of course. No, of course not. The strategy, no, there's no such thing as 100% winners. But according to our tests and our real money trades, the morning payouts have been extremely profitable. They've been extremely predictable. They've been performing exactly as we expected. And as long as we stick to the system and follow along with our system, then we get the expected results.
Nice. Should people be worried about more downside in the market this year?
That's the beauty of this system. We don't really care. We're betting on a market phenomenon that's held up for over 30 years. That's 3 full decades of data, and it worked just as well in bear markets as it did in the bull markets. And that's because of the way that we're trading these, the way that we're structuring these versus buying and holding for a long term.
Yeah. Can I trade this in any regular brokerage account or in an IRA or a 401k?
Yeah. So as long as your account can trade options and it can trade spreads, then you're fine. Right? So it doesn't matter if it's 401k or retirement, it doesn't matter. As long as you can trade options.
While we're on that, sorry, go ahead.
No, go ahead.
While we're on that, we did have a question about whether you have a preferred broker that you recommend.
Well, other than the couple of instances where we got stopped out unreasonably by Thinkorswim, I do use Thinkorswim. I use Tradier. I use Tasty Trade. I use Interactive Brokers, but I don't really like them that much. I have Fidelity. I have a whole bunch of them, and they have all done very well for me. And this program in particular, for example, the one that I compounded is in Tradier. You see, this was a 1K. It's called 1K account. It is now at $4,509. You can see my today's trade in there. I only trade morning payout plan in this, and I compound this particular one, and I do it in Tradier because I save on brokerage fees. It's just a flat fee per month, and then I can make as many trades as I want to without paying an additional commissions. There's a little fees here and there, but I don't pay any more commissions. So that's a great brokerage. Their software is a little slow. Their execution is not as good as something like Tastyworks or Thinkorswim. So sometimes we have to wait a little bit longer for things to get executed. If you're willing to live with that, then that's the cost of paying no commissions, right?
What's the name of that one?
Tradier, Tradier.
Tradier. Yeah, learn something new. All right. So it is retirement account friendly, and you can trade it in any brokerage, any normal brokerage that gives you the permissions for the options. So what's the next morning payout trade? Let's have it.
Well, if you looked very carefully at that last account, you would have seen today's. But I can't tell you what tomorrow's is going to be. Right? We look at the market, we evaluate, we look at which options are cheap, which ones are expensive, and we construct a trade. So you'll just have to find out tomorrow and sign up and be a member.
Yeah. All right. Awesome. Well, what's the max risk per trade if it's around $300 to get in?
Yeah. So we always set our stop loss at 25%. Of course, execution isn't always perfect, and so maybe it might go a smidge over 25%. On our live trades, I don't think that's really ever. I think the worst we ever stopped out at was maybe around 26 or 27, if I remember correctly. But it's always right around that 25% when we do take a loss. So we never get completely wiped out. We don't take 9 steps forward and 10 steps back. Right? It is very, very manageable. And as I showed you guys on that compounding screenshot, When we lose, we make up for the losses very, very quickly. It's been very consistent both in the studies and in the real life results, where whenever we lost, we were able to make up for it within a few trades. And so that's the drawdowns are minimal. And that's one of the features of why this makes it such an excellent compounding strategy.
Cool. What are your just kind of sticking on that for a second? What are your profit targets usually?
Around 13%.
13. Okay. Yeah, that's what I thought. I was just double checking. Somebody asked that earlier and I didn't want to answer them because I wasn't 100% sure. Okay. Well, this is Monday through Thursday. Of course, not guaranteed every day, Monday through Thursday, but definitely not on Fridays. Why not?
That's right. So when we trade over the weekends, there's extra volatility, and we don't get paid for it though. If we structure our trade and we find that there's additional risk over the weekend, but we don't get paid for that risk. And if we're going to take additional risk, we want to get paid for it in order to preserve our risk reward ratios. So because of that, we don't trade over the weekends.
All right. Well, once we get in the trade, how do we close the trade?
Well, we have automated exits. And so you don't have to do anything to exit a trade. We explained a little bit about the snafu we had with Thinkorswim, but I will teach you how to put in those automated exits. And then except for Thinkorswim, I alert everyone when to exit. So even if you can't put in the automatic exit, or if you're on Thinkorswim, it doesn't matter. You will get the alert and you'll be able to exit at that time.
Very good. Is there any sort of guarantee, or people just taking a chance on this thing?
Yeah. So this is a premium offering. It does take a lot of work on my end. Like I said, I don't know what the trades are tomorrow. I do have to every day go in and look for these things. So we are offering everyone a 14-day money back guarantee. That's 2 weeks worth of trades. And that should be plenty of time. That is generally 6 to 8 trades. And generally 6 to 8 trades is enough for you to at least make your membership fee back. So it should be more than enough to evaluate the program for you guys.
I would think so. Yeah. What happens if I miss a trade? You do a trade on Tuesday and I'm not around.
Well, we have 3 or 4 every week. So while most people are super excited to get into the trade and they wouldn't want to miss the trade, it's okay. Like we are humans first, we have lives first, and then we're traders second. And I know sometimes for some of us, it might feel the other way around, but we have lives. So if you need to miss, you miss. It's not a big deal. You'll have the next opportunity tomorrow. Generally, we don't want to miss huge blocks of time, but and we don't want to cherry pick, right? The key to this is that you keep swinging the bat. When you lose, you keep swinging the bat. It's because it's proven that it recovers very quickly. So don't worry about missing one here and there. It doesn't really matter. It's just take the next trade.
Consistency is important, but it doesn't mean you can't miss a day.
Right.
Are there any other methods you'll teach us in the master classes and in the trainings?
Yeah. So I will give you all the details and a few tricks up my sleeve that can increase the potential profit up to 20 or 30%. I have taught some of those already. We've used them once. In general, I've given to the general membership, hey, let's do this instead of our normal exit. And we were able to collect 20 or 30% profit on that one because we use those tricks. But I do teach those to everyone. Yes.
Nice. All right. Do I have to be glued to the computer to take these entries and exits?
I know both entries and exits are super easy to manage. So first of all, entries are always happening right around the exact same time, right around 3:30 p.m. every single day. And the exits are automated, except for, of course, for Thinkorswim. But I do give you the alerts. And as long as you see that alert, you'll know when to exit anyways.
Awesome.
And that's only for the stop. You can still put the automatic exit for the profit. Which means 77% of the time it's automatic for you anyways.
Yeah. All right. So will it cost $39.97 per year to join, like we've been charged in the past on other premium services?
No, right now, new members can get in for $19.99 for 2 years. That ridiculous $4 for the second year. Okay. And that's up to 200 trades. It's like you're only paying $9.99 for each year.
Awesome. How do I set up my own morning payout plan in the stock market?
Yeah, so click that link and you'll find out. We'll show you exactly step by step. Like I said, nothing is held back and everything explained very, very clearly to you on exactly how to set everything up, including how all of the options are traded. I mean, technically, I teach you enough where you don't even need me anymore. You can do it for yourself. But
Yeah,
most people don't do that.
I mean, it's funny to say it that way, but it's true because, like you said earlier, you don't hold anything back. You'd be thrilled, and not a lot of people could say this when they're an expert in something, but you'd be thrilled if everybody that joined was as good at this program as you are. Like that would be your
Absolutely.
ultimate. That would be your ultimate accomplishment. A lot of people are like, no, I'm going to keep secrets for myself, or I need to be better than everybody else to maintain my position on the pedestal here. But no, I mean, listen, you did this. You traded so much money in the funds that you did before. You don't need to prove anything to anybody. So you're just happy to teach everybody as much as they want to learn and make them as good as they could possibly be. And that is awesome.
No, thank you. Yeah, it's absolutely right. Thank you.
Yeah.
Thank you for that.
Yeah, for sure. Join the morning payout program for just $19.99 for 2 years today. That's all the stuff that you get in there. The 3 to 4 alerts each week, automatic exits, morning payout masterclass, payouts unlocked, payout option criteria, notifications every which way and Sunday, customer service live every weekday, the 50 for 50 half off, the second year for $4, and just more stuff we don't even have room for on the slide.
Yep. All right. So let's take the questions from the chat.
Yeah, absolutely. So, and we probably answered, some of them already, but we'll go through
Right.
them nonetheless. So you did answer this, but just to reiterate, most of the time these are on the SPY, right? That's pretty much what we're trading on this.
Right. It's I think there's only been one trade ever that wasn't on the SPY, but yeah, it's always on the SPY.
And your profit targets are 13%. Your stop losses are 25%. The least
Correct.
amount they can trade is about $300. They can get in on these. It works bearish, bullish, and flat. So there was a question about how is this different from Nate's overnight options. So I don't know how familiar you are with that. I could probably answer that one.
I think you're.
Yeah. So they're similar in a couple of respects. So Nate also puts his overnight options out Monday through Thursday. He puts them out at 3:30 p.m. and they are 1 DTE. So they're expiring the next day. They do very frequently close out automatically or hit their targets early the next morning, not usually 9:32, but pretty early. And so they're similar in that way. Where they're different is that Nate is using his math is based on a different comparison. He's doing vertical spread. So he's looking at the difference of value between the two different strikes, whereas Kane's looking at the value between the different expiration dates or doing a diagonal spread. But so the trades are designed differently. They're comparing different things, but they're still basically both doing a math comparison, right? I mean, is that fair to say? Like you're doing a math comparison. It's based on the math. You're not trying to figure out whether there's some fundamental thing that's going to make the market go up or go down. You're looking at the value of it. And Nathan's doing a similar thing, but he's comparing strikes. You're comparing dates, I think is the main difference. And then also, they're both debit spreads. So they're the same in that regard as well. So they're very similar, but the trades are designed differently. And so, you're going to have, and so Nate has about the same win rate. It's like 81% or something like that on his overnight options. He targets around 20% or 25%, but his losses are higher. So he's coming out right around the same, like 4.5 to 5% kind of like net every day. And it's the same thing where, you don't have to have that huge win net because you're doing it almost every day, and adding it up every day does more for you than you think it does compared to like, all right, well, you could make 20% net, but it takes 3 weeks to do it. That's not as good as 5% every day.
That's right.
So it's but they're they're very similar, but the spreads and the math is just done differently.
So here's what I'll offer in terms of the
Yeah.
difference then, based on what I heard, is that if you're doing a vertical spread, then, and it was no surprise, I was about to say, and then you said it, is that the loss that you're going to take is going to be bigger because there's a huge drop off. If once you're past your gain zone, you're into your loss zone, it's a very sharp drop off. Versus if you're doing a time spread, because that difference in value, because you have that extrinsic value and the one that hasn't expired yet, is a much softer drop off. So it's a lot more difficult for us to get stopped out. And we stop out at a 25%, whereas it sounds like Nate would take a much bigger hit.
Yeah.
So if you're trying to compound those larger drawdowns, make it a lot more difficult for you to compound effectively. So that is the only major difference that I heard.
Yeah, he exactly what he would say as well. Like they generally don't compound on overnight options, and his win rate, like his percentage return on the wins is a little bit higher, but the percentage loss on the loss is a little bit higher. So it feels a little bit more like a swing than I imagine your program does, because yours kind of fitting into a more narrow range there. So hopefully that answers that person's question about the differences. Let's see. So I think we might have addressed this. I'm not sure, but if you miss the trade at 3:30, you have a little bit of extra time because we're doing the SPY. You can get in or you can enter the trade or get filled up till 4:15 instead of 4 o'clock. One person asked whether if you miss it completely, whether you can get in it the next morning. And I'm thinking if they hit their targets at 9:32, there isn't a whole lot of opportunity to get in the next morning.
Right. Yeah. So in generally by the open the next day, we are already between 5 and 8% in profit. And sometimes we're 13, right? We already hit our profit target. So generally, it's not a good idea to get in the next day. And plus, do you want to do a day trade? Maybe you do. Maybe you care. Maybe you don't care. But generally, a lot of the profit is already made by the next morning.
And the day trading thing is also a common advantage to both yours and Nathan's strategies, where it's an overnight trade. It's not a day trade. And so you don't have to worry about those limitations and stuff. So one person asked, what do you do if like it opens lower and it's going in the other direction? And I imagine that's where your stop loss comes in, and that's where worst case scenario.
The worst and really the only case scenario that hurts us is a gap down and run away from our trade.
Yeah. All right. Well, so one person said, so you're saying this is when I think you were talking about TOS and the kind of glitches or the 5 microsecond thing. They said, are you saying split our trading capital between Schwab and Robinhood? Well, I think that the reason some of the people split between multiple accounts is for day trading. I don't know why you need to do it for this program though. So, but no, look, we have thousands of members across our different programs that use Thinkorswim. It's by far one of the more popular programs, and this occasional glitch thing, I wouldn't be overly concerned about that.
Right. And again, like when it glitched, it's not like it was a crazy big loss, right? It was it glitched and then they stopped us out at maybe 5% loss or whatever, less than the normal stop out. So
cool. All right. Well, there were a few questions that were real specific about the trades, and that's all going to be in the training. We're not going to get too deep into exact selection and all that kind of stuff. So I think that covers all the questions that were asked. If you did ask a question that we didn't cover, go ahead, drop it in the chat right now. We'll try and cover it before we wrap up. Amex was asking about selling the 1 DTE and buying the 7. All that's covered in the training. We don't have to get too much in that. It's not always going to be 1 and 7. It's going to vary. So we'll get into the trade specifications and all that kind of stuff in the training and in the trade recommendation. So keep in mind, this is really kind of two programs in one, the way I look at it, because the main crux of the thing is that Kane's doing all the legwork and he's sending you an alert. But the second part of it is he's also providing you with the training so that you can do this on your own and do it in other tickers also. So it's like a, do it on your own program. And also, by the way, we'll do the work for you and send you alerts on the SPY. So, you can, and the reason I bring that up is because that gives you the flexibility to kind of put as little or as much effort into the program as you want. Now, Kane doesn't have a choice. He's got to do it. But if you just want to join this and just take the alerts, you really just need to go through the basic training of like, okay, how do I enter these trades in my broker account? When I get the alert, how do I take it from an alert and enter it in my broker account? And then how do I manage the trade or enter the stop loss and the profit target after that? And you can stop there. You don't have to learn how to do this on other tickers. You don't have to learn all the ins and outs of exactly all the selections and all the stuff that Kane's doing so you can replicate it. You don't have to do that if you don't want to. But he's providing it for the people that are looking to get deep into it and take it to the next level. So that's really cool. I think that's all we have. So last chance to pop a question in the chat or to write down the URL, tradingpub.com/alert. I would definitely write down the phone number because more often than not, when we close out a webinar, about 3 seconds after we close it out, somebody thinks of a question they should have asked. And if you have the phone number, then you'll have a way to get the answer to that. So 904-706-3539. You got anything else, Kane? I think we covered everything.
Yeah, I think we're pretty thorough here. So if you guys have any questions, like I said, customer service is there for you. If it's something that only I can answer, but there are very, very few questions only I can answer. But if there is something that only I can answer, kane@investpub.com. You're always welcome to email me. And people who email me, they find that I respond pretty quickly. So if you don't hear from me very quickly, sometimes it goes into my spam quarantine and it doesn't let me actually access it. So just if you email me, you don't hear from me, that's 99.9% likelihood that's exactly what happened. Just contact customer service. They'll relay the question to me.
Yeah. Kane's very responsive and loves answering questions. So it's and this is true of you. It's true of a number of the other people in our network here, our company. It's funny when somebody seems to be like, okay, you were born to trade, but also born to like teach. Because you don't find too many people who are really, really good at something and then also really, really good at teaching it. Like, the best of everything is usually not the teacher. It's usually, somebody who's out making $1 million doing it and keeping it to themselves. So it's really special when we have somebody like you who's good at both and enjoys doing both. So we appreciate you.
Thank you.
Yeah. All right. Well, it's almost tomorrow's opening bell, so we should probably wrap it up.
That's right.
We will be back here in the same room tomorrow morning for opening playbook with, I want to say Nathan and Graham will be here tomorrow morning. And we will see you there. I hope everybody has a good night. Thanks so much for all the time tonight, Kane. Appreciate it.
All right. Thank you. Thank you for your time. And thank you, everyone. I'll see you guys later. All right. Bye, everyone.
All right. Have a good night.